Good morning, everybody. Welcome back to another episode of The Market Open. It is Friday, March 7th, 8:44 a.m. I am here 1 minute early. You guys should be proud of me. I'm here a minute early. The reason I'm here a minute early is because we got this jobs data, and I wanted to get right into it. It's pretty good, folks. It is pretty freaking good. It is not bad. U.S. non-farm payrolls come in at 151,000 jobs added versus 160,000 expected. We really needed to get above 150. That was the number. And we got it. And there was a little bit of fear yesterday based on the private ADP payrolls of 77,000 versus 144,000. Or that number came out 2 days ago that we were going to miss on non-farm payrolls, but we didn't. I mean, technically we did 150 versus 160 expected, but the whisper number was more about 150. And we got that. We needed it. We really needed it. And we got that. Now, U.S. unemployment rate came at 4.1%, up from 4%. I thought that would actually be a little bit higher. So that one ticked up. It didn't tick up that dramatically, but it did tick up, which is kind of what we expected. And it's what we needed to see. Technically, this is good because we've had a lot of data that showed the slowdown of the economy, which is bad news. That could be good news because that means we could cut rates sooner. This is more good news that hopefully is just good news because it indicates a economy that is slowing down, but slowing down very slowly. Technically, that could be bad news because then we're not going to cut rates as soon. This is why it's so nuanced. But I think on a day where, or on a week where we got really bad economic data pretty much every single day, this is one of those reports that we needed to be good. So in the pre-markets right now, Tesla's down 0.5%. Nvidia's up 1.4%. Broadcom had a great earnings yesterday. They were up 20% at one point. Right now, they're up 10%. Robinhood's down 0.5%. The S&P 500 is up 0.24%. We did get a green candle as soon as this data came out. Now it's going a little bit red, but you can see that little bit of a green candle right there. Bitcoin above 90,000 again. We do have an official strategic Bitcoin reserve, which we'll talk about as well today. And that is green. Big Bear AI, not the best earnings yesterday. That's down 14%. SoFi is flat. A lot of stocks are relatively flat, somewhat green. They took it on the chin yesterday. Netflix, for example, was down about 9% yesterday. That's up just a little bit right now in the pre-market. So nothing crazy in the context of how stock prices are reacting to this jobs report. But overall, we needed a good jobs report, and it looks like we got a pretty decent jobs report. So if you're just joining, 151,000 new jobs were added last month versus 160,000 expected. Let's get some coverage on this jobs data, and then we will keep going from there. Is this someone's birthday in the chat? Do we have someone's birthday? Kevin, happy birthday to Kevin. Everyone say happy birthday to Kevin. He says, hi all, it's my birthday today. May we all see green candles. Kevin, thank you for being here. Thank you for spending your birthday with the entire community on the Market Open, and happy birthday to you. And thank you, because your birthday got us some pretty decent job numbers. All right, here we go.
I don't want to wait for that, Joe. I want to warn people about policies.
Whether it was spending fueled by debt creation, whether it was energy policy fueled by insanity, and all that will extract a temporary price. There is nothing for free here. When you complain about all the programs that were enacted after and during COVID that were crazy big, well, to reverse them, that we paid for our growth, but we paid for it mostly with debt. This is not going to be pretty. It's not going to be easy. But if our panel's discussion is anything, it's a bit depressing, because if we can't take some volatility in a damn stock market to get our fiscal house in order for our kids and our grandkids, what comes next?
Rick,
It's unnecessary volatility.
On and off is getting our fiscal house in order. That's what's causing volatility here. Tariffs go up, tariffs go down, tariffs go up, tariffs go down.
Well, tariffs they've been threatened. They haven't even been inputted yet.
Problems. I've written about them extensively.
They haven't even been inputted yet.
They got tariffs. They got eggs.
So, but Steve, you raised a very interesting point about the volatility. Like, markets are supposed to be volatile. This happens. I don't understand and if you want to be disruptive and you want to make real fundamental change, things are going to get broken. And I think the administration certainly is willing to break things.
I'm sorry, Joe. I reject that. Without having any issue at all with the objectives of the administration. I've been covering economic policy from administrations for several decades now. When they have a plan, they call you in. They give you a briefing book. They give you a series of estimates. They've thought it through. This administration, it appears to me, did not talk to the car companies until 3 days after the tariffs were put in place.
Can I say
Joe,
something
you
when
can
you're
do
done?
this better. I can do this better.
Did car
The
companies
administration
read
can
the
do this better.
newspapers
Can I say one thing to you, Steve?
In November, October, and September, he said he was going to do this. What
Yeah.
do you need to call
That's
the car
different.
companies?
Actually,
Rick,
he didn't say
Rick, that's
he
different.
didn't say
Rick.
25% on Canada and Mexico.
But
Wait,
He
I
didn't say
can't
that
hear.
before the election.
Yeah, CNBC is worse than our chat when politics comes up, bro. These guys are going at it, bro.
Does anybody know even what happened here? I mean, we worked one Sunday, they were going to put tariffs on. He decided not to do it on the Monday. And then he said there was going to be tariffs. And then he put them on, and then he took them partially off, and then he took them off according to some other metric of those who follow the USMCA. If you want to do tariffs, but it's like the gang that couldn't tariff
But
straight.
suddenly that caused
Steve,
all
you
this
talk-
inflation
but
Jason's
Steve-
talking about.
Wait,
No
wait,
tariffs.
wait,
No, Joe,
That's a
Joe,
different
I think
story.
economic
Steve, you
policy,
talked
you want to
about
talk about the
all the
future, not
briefing
the
books.
past. Because by
Steve,
the
you
time
talked
you talk
about all the
about the
briefing
past, it's
books
too late.
and all things that you've gotten from people in the past. How successful were all those administrations?
Sometimes they're very
No, but-
successful,
but not
sometimes
in
they're
terms
not.
of- but in terms of the waste, abuse, and fraud, and this is a bipartisan issue. Bill Clinton talked about it. George Bush talked about it. None of it ever got done. So this
Bill
is
Clinton
a
did
much
some.
different,
Bill
very
Clinton did
little.
some.
I'm not blaming him. I'm not making this a partisan issue. I'm saying that we need to make some serious structural changes, as Rick mentioned. It's going to be messy, but for the greater good.
Let me respond about
One last
messiness.
point.
Let me respond.
Let's just judge the policy 36 months from now. Let's not do it in real time.
I sat in a 3-hour seminar about deregulation during the Trump administration so that you at home didn't have to. Okay? And let me tell you, deregulation is very hard. And it's a very important thing for the markets. They really like this idea. About 70 or 80% of the court and legal challenges of the first Trump administration were lost by the administration. There was hope among those who are proponents of the deregulation that he would do better this time. But where are we, Joe? We're in the courts on DOGE. If he wants to reduce the waste and fraud and abuse of the administration, let him go through a process that doesn't create this kind of chaos in the courts. It's already happening. He's losing in the courts.
Will take over.
He's losing in the courts.
Okay, so I mean, the thing there. By the way, happy birthday to Deneen as well. We got Deneen and Kevin in the chat. Happy birthday to both of you. The reason I think these guys are freaking out about each other is because the jobs report was good, but the volatility that's been caused by the jobs report is creating some people to be on one side of the aisle, which is that, hey, the country is more important than the stock market. And if the Trump administration is trying to fight for our justice with these tariffs, yada, yada, then we should be able to handle volatility in the stock market. The other side of the aisle is saying, no. This is not about justice. This is about an administration that has no clue about what they're talking about when it comes to tariffs. They have no clue about how they're implementing it, when they're implementing it. They're flip-flop every single day. President Trump delayed the tariffs on Mexico yesterday by another month until April 2nd. So you got one side of the aisle saying that it's something that has to happen for the country. The other side of the aisle saying it's not necessary because there's no plan in the first place. It's just all kind of nonsense in the air around the concept of tariffs. And so they're going at it. And I would imagine that it's a healthy debate, but it is a debate that is indeed happening right now, given the Trump administration's policies. If you're just joining, U.S. non-farm payrolls coming in at 151,000 added versus 160 expected. Unemployment rate was at 4.1%, up from 4% previously. Again, good numbers. If we got below 150, I think this would get very ugly. We would probably get, I don't want to say a rate cut in March, but we would get a better chance than not of getting a rate cut in March if we came in below 100,000. Definitely would get it in May. Now, let me check the probabilities on May if that went down at all, because this good news technically could be bad news for cuts. May, yeah, look at that. May went to 44%. This is why macroeconomics is so interesting, bro. So interesting. Like yesterday we were at 50% because we got some bad layoff data where we had 172,000 jobs lost in February, up from 49,000 in January. Now we get some good non-farm payroll data and we're back down from 50% to 44% because now the market's like, well, we kind of don't need to cut in May. JPAL is going to be talking at 12:30 today. It's going to be very interesting to see what he says on the context of the labor market and what it means for cuts. He's obviously not going to say if they're going to cut or not, but we're going to have to read between the lines and see if he's implying that, yeah, there's enough weakness to give us a cut earlier than expected. But I guess we'll find out later today. Overall, the non-farm payrolls was the right number that we needed to see. Goldman Sachs wanted at least 150. We came in at 151, which is not too bad. Here is Scott Bessent. He was on CNBC this morning as well, and this is the Treasury Secretary, and here was his analysis and arguments for defending the concept of tariffs.
And guest of the morning, Treasury Secretary Scott, I think from, let's see, we're say wow about
much needed course adjustment. And when we go back and look at what's happened, there's a new paper out called the China Shock. And it talks about what happened post 2004, that some of the communities recovered, but the workers never recovered. And that it was much more devastating on a human level. And what we are trying to do is make free trade fair trade, because the trading systems have become incredibly imbalanced. You see it with these gigantic trade deficits that we run. You see it with the big surpluses that other countries are accumulating. So we're looking at tariff barriers, non-tariff barriers, currency manipulation, government subsidies, and in the EU, some of these gigantic fines that they're putting on our tech companies just because they see a big pool of capital. And we're going to push back on those. And at the end of the day, President Trump's been saying tariff is his favorite word. I think reciprocal may be his second favorite word. And we're going to put this at the feet of our trading partners on April 2nd. We're going to come out, talk about who's a good actor, who's a bad actor, to what degree they have put up barriers against us, and it'll be a choice. Either they can drop all the market manipulation and things like that they've done that have hurt American workers, and if they do that, then we could have more frictionless trade, or we'll put up the tariff wall, we'll collect a lot of money, and we will make the system fairer.
Couple of things. I think you've made the point that unlike the printing of too much fiat currency, which might be an underlying cause of inflation, the tariffs don't cause long-term inflation. They could cause some price increases, but not long-term. But then at the same time, you said that Americans don't necessarily just want everything to be really cheap. They want our workers to be employed here. And that the prosperity here doesn't mean being able to buy cheap goods. It means being able to live the American dream through having a job and having a future, et cetera. So we're going to have higher input costs forever.
So what, higher input costs forever? No, it's the tariffs are a one-time price adjustment, and everything else the administration's doing we're not getting much credit. As of yesterday, energy prices were down 15%. Crude was down 15% since inauguration day. 10-year rates are down, mortgages are down. The spreads between the 10-year rate and mortgages.
He is right about that. The 10-year mortgage rates and oil prices are definitively lower than when Trump first took office.
Have come in. So we saw we saw mortgage applications pop up last week. I think if we can keep on that trajectory, and Joe, the American dream is to be able to buy a house. We can't import houses.
But this could all be a reflection of the economy.
Well, that's what I was going to ask you. As an investor who used to spend their day investing in all of this stuff, do you look at the 10-year, do you look at all of the signs that you just talked about, WTI and everything else, and say that is the work of the government and a newfound confidence in what's happening to the economy, or that's actually a concern about what's going to happen to the economy?
Well, I think it's both, because we could have the worst of all worlds, because look, and I'm not new to this. When I was on your show last time, I've been saying it for 6 or 9 months. I believe that the Biden administration, and it's back to Joe's question on working Americans, what is the American dream? But the Biden administration created this bad equilibrium where the top 10%, people in this room, probably most of the people watching this show, top 10% of Americans are 40 or 50% of consumption. And that is an unstable equilibrium. The bottom 50% of working Americans have gotten killed. We are trying to address that. We're trying to get rates down. And could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period. There's going to be a detox period.
I think that temporary pain that you've acknowledged, that the president has acknowledged, I think the question becomes, is temporary pain the new transitory inflation? How do you know that we get to the other side of this, and how long do you think it actually takes?
Well, look, there's an adjustment. We'll see whether there's pain. What we are trying to do, I talked about it at the Economic Club of New York yesterday. We are trying to transition from public to private. I talked about we are going to have safe and sound regulation to get our banking system going again. So the banks should be generating loans to private companies. Employment should be from private companies, not from government. And I'm confident if we have the right policies, it'll be a very smooth transition.
Okay, so that's what we got from Scott Bessent. Kind of the same stuff we've been hearing from Trump. It was a bit better than what Howard Lutnick said yesterday in the morning. But at the end of the day, the core argument that he was saying is that tariffs are a necessary part of the administration's fiscal policy, and tariffs are a way that the administration wants to engage in foreign trade policy, and that's not going to be changing. Now, again, even though he says that, the problem is they say they want to do tariffs, but then they reverse their decision every other day. And I think this is the problem that the markets are having. Markets, by the way, going red right here. Robinhood getting hit down 2%. The jobs data was decent, 151,000 versus 160,000 expected. Markets are not holding up enough to like it. Really, the markets right now are showing me a continuation of what we saw last night, and last night was pretty ugly across the board in terms of a lot of these stocks. And the reason they were ugly goes back to the point about tariffs, which is that sometimes you implement them, sometimes you don't, sometimes they're delayed, sometimes they're not. And I just think no one really knows how to make sense of them. So Bessent, Lutnick, Trump, whatever they're going to say about tariffs is, whatever they want to say. At the end of the day, if we don't have a stable policy, I think we're going to still be in a state of volatility. Now, again, maybe they want to make it unstable. Maybe they want to create this type of volatility in the market in order to get bond yields down. We don't know exactly what their master plan is here. Maybe they don't have a master plan. But this is what we have to deal with as investors that are looking at kind of how the market's reacting to this. Some big movers in the pre-market. So Broadcom had a really good earnings. We'll talk more about them, but essentially they grew 77% in terms of their AI revenue. Their call was very good. They had amazing guidance for 2025. They were up 20% at one point. They're only up 8%. I am skeptical they're going to be able to hold a lot of this green that they're seeing right now, just given it could be ugly today, right? And so it's Friday. You got options expiring. You got a bunch of different reasons why stocks could go down. Granted, stocks have been pretty red for the past 4 days. Maybe we get a reversal. Yesterday was just red across the board. Tech stocks got destroyed. S&P was down 2%. The Nasdaq's down now 10% from its highs. The S&P down about 5% or 7% from its highs. So if there was any time to have a little bit of a bounce, maybe it's now, but we're going to have to see if we get that today. 76% of you said we will go red 15 minutes again after market open. So many of you do not have the confidence that we're going to hold on to any of the green that we're seeing right now. Here's a good chart that shows what's happening historically with corrections from the stock market. So the S&P 500 is now down 7% from its peak on February 19th, the largest pullback since last August. So this is the largest pullback we've had in about 7 months. This is the 30th correction of 5% off of a high since the March 2009 low. So after the great financial crisis, this is the 30th correction. It's actually surprising we've only had 30 of them, to be honest. That is more than 5% from a high. And, at the time, all of them seemed pretty bad. You had a bunch of reasons for them, whether it was Fed fears, trade war, tariffs, coronavirus, inflation rates, European debt, etc., Japan earthquakes. I mean, there's all these Ebola, all these different things that have happened historically that would have made you feel like the world was ending. And this time it's, I guess, tariff fears again with a volatility around the uncertainty of the administration's policies. But at the end of the day, when you zoom out, it's like, all right, it might just end up be a blip in the broader scheme of what happens in the market in 2024. But we're going to find out what Jay Powell thinks today. He'll be talking at 12:30, and we'll get his thoughts on essentially if he thinks this is something really bad or this is just par for the course when it comes to what happens with the Trump administration. So right now, 7.6% was the decline. Currently, we're at 7.1%. So 7.6% has been the median decline over the past 30 corrections from all-time highs on the S&P. We are at 7.1% in the past 15 days, 61.47 on the S&P, a low of 57.12. Now, the other thing that's important about 57.12 is that is the 200-day moving average on the S&P. So giving up that 200-day moving average would not be the best. We're going to see today if we close below it again. S&P 500 right here. I think basically, yeah, we're just sitting right at the 200-day at 572. So today's going to be an important one to see if that ends up playing out. What did I say? It's par for the course. Wait, didn't I say that? I said par for the core. What the hell is par for the core? What did I say? No, I blame you guys. You guys should be helping me with these phrases that I should know about before I say them. You guys have to make sure I don't say them the wrong way before I say them. I don't know how you'll do that, but I blame you guys. Par for the course, huh? Why did I say par for the core? How did I come up with par for the core, dude? How did I do that? This you got to admit, it's kind of a talent to be able to come up with this shit randomly. Like, that's just like, it's not easy, bro. Anyone can say par for the course. Who can say par for the core? Who can come up with that? This is what Trump said yesterday when he was asked about the stock market. And then we'll move on to a couple other headlines that we have right now.
Our globalist countries and tremendous progress on both.
President Trump, what's your thought about why the markets are so spooked? Do you think they don't like the tariffs, or do they not like the uncertainty with some of the changes and the carve-outs?
Well, a lot of them are globalist countries and companies that won't be doing as well because we're taking back things that have been taken from us many years ago. We've been treated very unfairly as a country. We protect everybody. We do everything for all these countries. And a lot of these are globalist in nature. You know, they have, if you're outside of the United States, it's going to be a little bit different. We just weren't treated right. We were ripped off as a country. I've been saying it for a long time. And I did it to a certain extent in the first administration, but with COVID coming in, we had to focus on that toward the end. But we had the greatest economy in history in the first administration, and I think we'll do even better now. But this is something that we have to do. There'll always be a little short-term interruption. I don't think it's going to be big, but
so essentially, Trump said, I'm not even looking at the stock market. There's always going to be some short-term interruptions, and the globalists have something to do with the stock market sell-off. Look, overall, I think the thing to take away from that as an investor is recognize that this whole idea of the Trump put, the idea that Trump is going to make sure that the stock market pumps, he does not care. It is very obvious he does not care. Now, when he says, I'm not looking at the stock market, is that accurate? Obviously not. He's probably looking at the stock market. He's getting insight from his advisors in terms of how the market's reacting to his policies. However, I think he's picking tariffs over the markets. And I also think we have not hit enough pain in the market for him to trigger the Trump put. I mean, we're barely down 3 to 4% year to date on the S&P. I think we got to get down at least 7 to 8%, really 7 to 10% on the S&P 500, which would get us at around 5,300, 5,400 for him to actually feel, all right, like the market's not liking what I'm doing. I need to make a pivot. Until we get there, and maybe we do, there's a lot of signals for why we're bottoming right now, and we'll talk about some of those signals as well. But if we do consolidate here, maybe we're flat for the next couple months, but we're not definitively lower, then maybe, then the Trump put gets triggered after a couple months of stagnation in the market. But I'd rather have that than, down 20%. And then the Trump put gets triggered, because down 20%, it's just going to be hard to recover from that. Or if you do recover from that, you're going to be barely breaking even, right? So he does not care about the markets. I think that's something that everyone has to take away. He cares about everything else besides the markets until the markets get really bad. And hopefully for all of us, the market won't get that bad. Moving on to Bitcoin. So one thing he does care about kind of is the strategic Bitcoin reserve, which was officially established yesterday. Look, my initial reaction to this, I think some of you guys have seen it. I talked about it yesterday on the daily recap as well, because the news broke while I was recording that episode. I don't think this is that big of a deal. And the reason I don't think it's that big of a deal is because if you go through the actual document, I'll put the link in the chat for anyone who wants to read their executive order. It doesn't really say much about how they're going to buy more Bitcoin. The only thing they really say is that the Bitcoin that they have will turn into a stockpile and they will not sell any of it. So they're pledging to not sell any of the 200,000 Bitcoin that they currently have. They're referring to Bitcoin as digital gold, but they're not really saying, hey, this is how we're going to buy more Bitcoin. And I think maybe those details will come out in the future, but those are the hard details, right? It's really easy to sign an executive order that says we will not sell our Bitcoin and we will classify it as a Bitcoin strategic reserve. It is really hard to say how you're going to buy more. What is the mechanism by which you're going to engage in fueling the Bitcoin reserve? And then what are you going to do around crypto taxes? What are you going to do around the other currencies that you talked about, Solana, XRP, et cetera, that you're putting into the reserve? Like none of this stuff was established. And to me, the press release or the executive order was just saying, hey, we like Bitcoin and we're not going to sell any of it. And that's good. That's not bad. That's not bearish. It's just like not bullish either. It's not really, I guess it's long-term bullish, but it's not short-term bullish for price action in terms of like what they're going to do to pump up Bitcoin, which is why the market sold off on it. Bitcoin went down to 85,000 as soon as the report came out, because the market obviously realized, well, there's no people, there's no explanation of how they're going to add Bitcoin. So a lot of the OG crypto people, at least on X last night, were like, this is stupid. This is not what we voted for. We voted for a strategic Bitcoin reserve and for the government to give us a plan on how they're going to add Bitcoin. This is not that. Now, granted, maybe over time, we will get those details. There's David Sachs right there. Elon is there as well. I believe that's Elon. I'm pretty sure, sitting right there. So I guess we're going to see. But my initial take of this was like, this is a nothing burger. And Bitcoin could go up, Bitcoin could go down. They are not explaining how they're going to buy 100,000 Bitcoin a year, 1 million Bitcoin a year. Like there's just no details. Today's the White House summit. So we're going to get a lot of people that are industry leaders in crypto at that White House summit. Maybe they're going to be discussing different ideas on how to fuel the Bitcoin reserve. Again, overall, long-term, is it a good thing we have this? Of course. It's just short-term. People wanted a lot more. And that's not exactly that we got today. Here is Vlad. He was on CNBC talking about the Bitcoin reserve. Let's get his thoughts, and then we will keep going from there.
Trump signing an executive order to create a strategic Bitcoin reserve, but cryptocurrencies falling as traders seem disappointed with some of the details. In a post on X, the White House crypto czar, David Sachs, saying the reserve will be funded exclusively with Bitcoin seized in criminal and civil forfeiture cases. He also said no Bitcoin will be sold from the reserve. Treasury Secretary Scott Bessent had this to say about the reserve just a short time ago right here on Squawk Box.
I am a big proponent of the U.S. taking the worldwide lead in crypto. I think we have to bring it onshore and use our best practices and regulation. I think that the Bitcoin reserve, before you can accumulate it, you have to stop selling it. We're starting with Bitcoin, but it's an overall crypto reserve.
Right. Today, the White House hosting a digital asset summit. Attendees include Coinbase CEO Brian Armstrong, Strategy CEO Michael Saylor, Gemini co-founders Tyler and Cameron Winklevoss, and our next guest as well. Joining us right here first on CNBC is Robinhood's co-founder and CEO Vlad Tenev. Good morning to you. There was a lot of debate about this beforehand from the crypto community, also the tech community, when it was first floated that there would be a Bitcoin reserve. And then just last week, this idea that other coins would be involved in it, there was sort of a backlash to some of it. Now there's a different kind of backlash this morning saying maybe they didn't go far enough. What do you think?
Hey, Andrew, good to be here. I actually think this is a sensible approach by the administration. I think that, you know, there's a lot of debate. Obviously, there's some people in the industry that maybe wanted more or different assets. But I think this is an approach that isn't terribly controversial. It's a good place to start. And there's a lot of things that we need to get done. I agree with Secretary Bessent that the U.S. needs to be a leader in this new burgeoning industry. And, you know, there's stable coin that needs to be figured out, market structure, prediction markets. So I think as an industry, we have to join together, be united, and keep pushing to make the U.S. number one in this industry.
Vlad, do you believe ultimately that the U.S. government and therefore U.S. taxpayers should be investing in and, let's be honest, levering themselves up to buy additional Bitcoin?
I think that the U.S. Has to make a determination about why it needs various cryptocurrencies and whether it needs them strategically. So I think that having some clarity on what happens in these cases where there's forfeiture or the U.S. Government somehow obtains it and whether, they're selling it or holding it, that clarity is actually useful to the market, because you've seen in cases like that the uncertainty causes fear. So I think this is a good place to start. Now, how far it goes, I have sort of less of a strong opinion. I know others.
I think Vlad kind of has the same take as me. Like, it's a good idea to start, but even you can tell from how he's talking, there's no details. So he can't really give a meaningful take because no one actually knows how they're going to fuel this reserve with more Bitcoin. Obviously, it's bullish long-term to establish this, but you need to have a lot more steps going forward.
There are other experts at the summit on Bitcoin strategic acquisition and other things.
I have two related questions. One is, this is an executive order, and I wish I'd actually had the opportunity to ask the Treasury Secretary this. Do you consider this an emergency?
I'm not sure. I mean, I think that there's various definitions of what constitutes an emergency. But what's clear is the U.S. and this administration is taking crypto leadership seriously and acting with a great sense of urgency. And I think the summit that they're holding today at the White House is a great example of that. I mean, certainly the administration's moving fast, government's moving fast, but I think rapid change is necessary if we're going to maintain U.S. leadership in what's an increasingly uncertain world.
40.
To be honest, we unfortunately switched topics at one point.
And then
from that,
we could go.
I wanted
at the very end, you had the last two when they were jumping up and down.
There were a couple other things that I was hoping to.
Hey, Vlad, did you seem? I mean, some people think all companies should have a treasury filled with Bitcoin. Could you ever see that being something that the United States would be, and it would probably be taxpayer money, but if it's going to 1 million, wouldn't that help in a lot of different ways for Treasury to have that reserve?
Well, I think that you get into the general question of should the U.S. be investing its money once you expand beyond Bitcoin into all sorts of other assets and potentially securities. And many countries have a sovereign wealth.
They buy gold.
Many countries have a sovereign wealth fund, which we're also instituting. So I don't think that's an unreasonable approach.
Right. Hey, Vlad, not only are we potentially buying Bitcoin in the future, but these other coins as well. And I'm curious how you think about that. I'm also curious how you think about the fact that so many members of the administration are invested in crypto themselves, and that inherent conflict that I think is very visible to those who want to see it.
Well, from what I've seen, I think that everyone's aware of that concern, and most people that I've talked to have taken steps to actually make sure that they're not conflicted by, selling their exposure or otherwise making sure they're disinterested. I know there's been a lot of conversation about that. I think a lot of people in the administration are joining because they really see an opportunity to help and put their talents in making our country and our government work better. I'm excited to see them. They're moving incredibly fast, but I think it's necessary.
Okay, I'm not going to lie. That interview was nothing. And partly, I think it was partly because of two things. That interview did nothing, and I think it's for two things. Number one, the questions they asked were not good questions, in my opinion, or they weren't like questions that were hyper-specific, and they kept talking over him when he tried to answer. Number two is Vlad doesn't have the details, like none of us do, on what the strategic Bitcoin reserve is. So he can't really meaningfully answer these questions with actual analysis because no one has any details because there are no details. Like, it's just a paper that says we are not going to sell our Bitcoin. And so, look, I'm hoping in the future they give us more details on what they're doing right here. But you had a lot of OG crypto people last night that were really upset because this is not what they voted for. They voted for an actual plan to acquire more Bitcoin. And that's going to take more time. And then you have to ask yourself, how high is that on the administration's priority? Like realistically, how serious does Trump think about the concept of how we're going to fund the purchasing of Bitcoin? Because I would argue it's maybe, you know, like 0.1% of his agenda. He's got a lot of other things to focus on versus adding Bitcoin. And I think what they did yesterday was more so one of those things that was to appease a lot of the people that have been complaining about it, but not necessarily a full-on explanation of how it's going to get done. This is the video of how they did it. And even when you can see in the video, Trump is just looking like he's there to sign it. And then he says, oh, well, this is a good idea, right? And David Sachs is like, yes, but it's not something that I think he personally cares that much about.
Today we're signing, this is very historic, an executive order establishing a strategic Bitcoin reserve and digital asset stockpile. This is a promise that you made throughout the campaign, and today we're keeping that promise. The reserve will be capitalized with Bitcoin that the federal government already owns, so it won't cost taxpayers a dime. This is like a digital Fort Knox for digital gold. And premature sales of Bitcoin over the past years cost American taxpayers over $17 billion in lost value because we didn't have a long-term strategy.
Right.
Now we do. So.
And this is something you believe in?
100%, yeah.
Okay.
And the whole community believes in it.
Very good. And I made the promise, right?
Absolutely.
Okay.
So today we're signing.
I mean, even at the end, right? He's like, all right, now we made the promise, right? And it's like, look, everyone who says this is a bad take, tell me how we're going to buy the Bitcoin. That's my question. Because if your argument is, well, you got to wait and be patient for them to announce how they're going to announce the purchasing of Bitcoin. I mean, yeah, of course you have to be patient. We have no choice other than to be patient, right? That's not even a response. It's like, yeah, of course we have to be patient because they didn't give us any details. And so I'll believe it when I see it, when they explain how we're going to buy Bitcoin. Some people have said they're going to sell our gold to buy Bitcoin. I disagree. We're not selling our gold to buy Bitcoin. Anyone who thinks that to me is smoking something. I find it very hard to believe the administration will sell our gold, which we've had for what is it, since 1980? I think we've had that strategic gold reserve. We've had it for a long time. I don't think we're selling that for Bitcoin. Not for the volatility of Bitcoin, dude. Like that's just, although, Trump embraces crypto, Trump did not grow up with crypto. Trump grew up with regular assets, stock market, gold, real estate in particular. I don't know if he loves the volatility of Bitcoin or if he's as Michael Saylor orange pilled that it's just going to go up and up and up, right? So if we're not selling our gold for it and we're not going to get Congress to authorize the power of the purse to be able to buy it, what are we going to do? Now, my idea that I pitched last night on the market close, which some of you guys liked, some of you guys didn't like, is what if we tax capital gains on crypto at a certain percentage and all the revenue that comes in from crypto short-term capital gains or long-term capital gains tax in the United States is used to just buy more Bitcoin for the reserve? I think that's a reasonable argument. I think that's a very reasonable argument. I don't think that's that crazy, but we're going to have to see if that ends up playing out and how that goes from there. Adam says in the chat, we can make Bitcoin bonds similar to El Salvador. Simple. People can buy a bond for better returns than Treasury and buy Bitcoin. Well, the problem with Bitcoin bonds, and I've never heard of this concept. I didn't even know El Salvador was doing that. But my initial take on that is that they're incredibly volatile. The reason people buy bonds is because they're not volatile. They're sort of guaranteeing that 4% return, 4.2% return, at 4.8% return from the 10-year. And, you can trust the U.S. debt. You can trust the United States will never go bankrupt. Therefore, you can buy our debt. I don't know if people would trust the lack of volatility in a bond around Bitcoin because the whole point of Bitcoin is to be volatile. So maybe that's one way they can finance it. But overall, they've got to explain these solutions. And, I don't even have that much of a strong opinion on it. If Bitcoin goes up, I'm happy because that's good for Robinhood. And Robinhood obviously has a big crypto business. But I think for the people that voted for him, based on the reaction I saw last night, they were not happy with this. They were not. I mean, they wanted real details, and this was smoke and mirrors to them. And so I guess we'll see if we get real details or if this is just going to be one of those things that is there forever. So that's what we got in the context of Bitcoin. We do have some breaking news right here, folks. 7 minutes until the market opens. Here we go. Nadella and Sam Altman continue to have their public beef, even though they don't say anything to each other. Microsoft has begun testing other AI models from xAI, Meta, Anthropic, and DeepSeek as potential replacements for OpenAI in Microsoft's Copilot product, as per the information. Wow. Interesting here. Interesting. So Mr. Sam Altman has obviously pissed off Nadella over the past couple of weeks with a variety of different things they've done. One of the biggest things was getting new partners besides Microsoft. I think Nadella, when they bought 50% of OpenAI, they thought that they were actually buying 50% of OpenAI, and that it's kind of like they thought they were getting into a pretty exclusive relationship. And Altman's whoring himself out. It's just that simple. He does not care. And as a result, Nadella feels cheated on. And so he's deciding to get out of this, or at least find a replacement to get out of this. I think that's another reason why Microsoft stock has not really moved in the past year. I mean, basically the market's realizing that Nadella got played, and I mean, down 3% year over year when you're one of the biggest tech companies in the world is sad. It just means that I don't think the market's thinking their AI strategy is as congruent with what they thought it was going to be back in 2023 when they bought 50% of OpenAI. Because now the market's wondering, does OpenAI really have as much value given the addition of more and more Grok models? The LLM that I prefer is Grok. I canceled my OpenAI subscription 2 days ago. I officially canceled it. There was no need to keep it. I'm paying like $50 a month for Groks because it's part of X Premium. So that's already a pretty hefty expense. But there was just no need to have another $20 a month for ChatGPT because it's not as good. Yeah, or if it is as good, it is, barely scratching the surface in terms of a meaningful advancement that you would pay for. But in my opinion, Grok is actually significantly better. Are there still some hallucinations here and there? Yes, but it's really good. So I don't know, dude. ChatGPT said over the past couple of months they've been working on PhD level AI agents, and yesterday they said they are thinking of licensing them for $20,000 a month to different enterprises. I think that's somewhat of a business model, but I don't know how sustainable that is, because if they're working on PhD level agents, Anthropic, Grok, Meta, they're all going to come up with those agents as well. Like, in this AI war, you don't have a competitive advantage, quite frankly, unless you're NVIDIA. Unless you have a monopoly on the intellectual property around the hardware, software gets replicated because it's all training. That's all it is. So I don't know. I'm really skeptical of OpenAI's ambitions. I do not think they're worth $300 billion right now. That seems a bit egregious. And it seems like Grok is taking their lunch. And I think that's also why Palantir launched the official partnership with XAI. And now Microsoft. I mean, if Microsoft replaces OpenAI for Grok inside of Copilot, OpenAI is going to lose a lot of API revenue because they get API calls as sort of like their main source of revenue. Because a lot of people use Copilot in the enterprise. If that changes to Grok or Meta or Llama, we are definitely going to see a weakening in the overall moat for ChatGPT. June says Gemini is getting way better too. Just added a better update. Yeah, I've heard about this as well. A lot of people have been saying Gemini is stepping their game up. Like, these models are getting better. These models are getting a lot better. Chad says PhD level agents sound stupid. Yeah, I mean, like, this is, to me, it's branding as well, because I don't think they have a business model. Consumer subscription is not going to work. Like, this is just not going to work. We need to have something. We need to be in the enterprise, right? This is why Palantir is winning, because the ontology is what connects these LLMs. That's where the real big money is, not asking people for $20 a month that can cancel their subscription, just like if they don't feel like paying it anymore. And then so when you're pitching enterprises these PhD level agents, it's just a question of, first of all, do those PhD level agents actually have a operating system they can operate within? Again, going back to the ontology here. B, how competitive of advantage is that? Because Grok is getting ready to add 1 million cluster GPU. They're at 200,000 right now in the next year and a half. I'm sure you can get a PhD level agent, quote unquote, once you add more GPUs and just have more training. So it just feels like there's not a real moat here. And I think we're going to have to see what SoftBank sees in OpenAI, given they're investing another $25 billion in them. Speaking of Palantir, we do have some new Palantir news as well. Palantir has delivered the first 2 Titan trucks to the U.S. Army. There is that bad boy sitting right there on the screen. Very, very nice that we officially have done this. It was around this time last year, I think February 15th, around in 2024. We got, or actually, no, sorry, it's right here. March 24th, this is on Arnie's post. March 24th, we won the $178 million prime contract to build 10 Titans by 2026. Palantir has delivered the first 2 Titans. We won this in partnership with Anduril as well, to the U.S. Army on March 7th. So less than a year later, we are delivering Titans. This was a pretty competitive contract. We went against Raytheon to be able to get this deal, and Palantir ended up winning it. Titan could be a $2 billion deal. We got paid about $200 million for the first 2. And if we end up delivering the next 8, that will be about $2 billion. So Nice to see. Palantir has also had 3 deals back to back to back over the past week. 2 of them international, one in France, one in Spain. And then the other one, TWG, which is an international holding company. So we really haven't had any press releases in the past 3 months. And then in 1 week, we get 3 of them. And now I guess this is the 4th press release with the Titan delivery. So good week for Palantir. The stock has held up decently this week, I would say. I know it got to 91 and now it's right here at 79, but everything kind of pumped. And that's why Palantir got to 91 a couple days ago. So that really wasn't like real to me. But we're holding up at 80 bucks. Hopefully we can maintain that $75 to $80 range and kind of consolidate there. But we have been consolidating at least around 80 to 85 over the past couple weeks. And we'll see if we can hold that arena. We got about 30 seconds until the market opens. Broadcom is dumping. I was a bit skeptical Broadcom could hold that 10% pump. Right now, it's up only 5%. NVIDIA as well dumping. It was up 3%. Now it's up 0.5%. And that's primarily because it probably is not going to be able to hold if Broadcom can't hold. Everything else is red as well. The jobs data that came in for those that are just joining was 151,000 versus 160,000 expected. So we did get a good non-farm payroll report. Unfortunately, it is not enough in this market to keep things elevated or to get us to get a little bit of a reversal to the upside. So we're going to see today how the market continues to perform in this volatile time. All right. Thank you, everybody, for being here. Friday, March 7th, 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. The markets are open. S&P 500, 571. That is down 0.25%. As we get into the market open, Robinhood is down 2.68% today. I will be live on the market close. Robinhood has a chance to get into the S&P 500 at 5:15. We will get that announcement. So if you are with me on the market close at 5:15 p.m. Eastern, we will find out if Robinhood gets in. It's Robinhood, Coinbase, and AppLovin that are the top 3 candidates to get in to the S&P 500. I personally don't think they're going to get in. I think it's too early, but if they do get in, it would be awesome. So we'll see at the end of the day. Palantir goes green, up 1%, 81.23. So Palantir goes green. Broadcom's up 4.7%. Tesla goes red, down about 0.5%. NVIDIA is green, 1.2%. On the day for NVIDIA, Rigetti's green, up 1.5%. Google's red, 0.5%. Apple's green. AMD is green. Bitcoin just below, well, no, it's actually below 90,000. It was at 92 a couple days ago. It was at 90 this morning. Now it's at 89,039 on Bitcoin. Big Bear AI is down 17%. That one got hit pretty badly. The street wanted them to lose 5 cents a share. They lost 45 cents a share. So yeah, it was a pretty aggressive miss on EPS. That one's down 18% on the day. Market cap now 862 million. SoFi down another 1/3%. TLT's up a little bit because the 10 years down. ASML is up 1.3%. Alibaba's up 2.14%. Macy's up a little bit. Arista Networks is up 2%. TWG, that's up. Abercrombie & Fitch, that's up 0.5% as well. Rocket Lab down of 0.5%. CrowdStrike down another 1%. Marvell, this was down about 15% the other day. That's down another 1.5%. Robinhood, 43.93, that's down 2% on the day, just below that $44 level. 42.50 was the low. So if we break 42.50, we are hitting a new low for the week. Broadcom still holding 5%. It was up 20% last night, was up 10% in the morning, now up 5%. So at least it's keeping that 5% pump. NVIDIA holding on to about 1%. Gap also had good earnings. They're up 16% on the day after increasing their guidance yesterday. Walgreens did get bought out. That is correct. Walgreens is going private in the Sycamore deal. They're getting bought out at, I think, $11.50 a share. So about a 30% premium to last week's prices. And Walgreens will no longer be a public company. So this one is officially going private. There was not a turnaround that was able to be completed on this one. Robinhood right here, 44. Palantir going green, holding on to some of its momentum, 81.20. And that one currently is green. Is Grab dumping? Grab is dumping. That's down 2%. Grab 452. That one is red. NVIDIA's kind of holding on to its green. It looks like it wants to go red. HIMS was down about 10% yesterday, down another 1% right here. Apple goes red. Next Decade's down. Google is down. Verizon is slightly up. Let's look at the Mag 7. All of them are red except NVIDIA. Tesla's getting hit. Amazon is definitely about to go below. I mean, it was below 200 yesterday. It looks like it's not really holding 200 right here. Apple's down. Microsoft's down. Meta's down. Meta back to 620. Meta year to date. Let's see that one. That one's been collapsing pretty quickly. Meta at one point was up 20% year to date. Now is up 4% year to date. So Meta continues to get red. David Garcia, thank you for the $2 super chat. I'm thinking of getting deep in the money Tesla calls for January 2026. I don't hate that idea. The problem is what strike do you pick? And that's the issue with the options on Tesla. It's like, even if they're deep in the money, like, I don't know, let's say you go to 250, let's say you go to 220. We've got to hope Tesla really is able to nail the robotaxi launch and the Optimus launch to an extent for the stock to be elevated above those levels based on the premium you're going to have to pay to buy those calls. Because if you buy a 220 in the money call, but you're paying $80 a premium, realistically, the stock has to be at $300. And I'm not optimistic about Q1 automotive revenue at all, to be honest. I really think the incentives they're doing, the Germany sales that we're seeing, the Europe sales that we're seeing, like, they're just not good. They're just not good numbers. So I think Q1 might be a little light. Bard actually lowered their price target yesterday from 440 to 370. They think that the consensus 437,000 Q1 delivery numbers is going to come in way lower than expected. I guess we'll find out if that's the case. But right now, the narrative on Tesla is it's a little tough. Right now, granted, if you're buying it long term, it doesn't matter. But short term, you could have some volatile price action, which means if you're buying an in the money call, it just might not print. Right? It just might not be at the strike you want it to be at by expiration. Which is why buying the stock might just be a better option here. Lunar also got hit yesterday. Their moon landing kind of went the opposite direction, down 25%. They're actually down 50% because they were down 25% yesterday during the day as well. So this one has got hit pretty badly over the past 24 hours because of their lack of a effective moon landing. Wait, Walgreens is in the S&P 500 right now? Oh, wow. Okay, so Walgreens is definitely getting removed today if they're going private. So that's an easy one. Intel is the other one that's rumored to leave the S&P 500. So they might take out Intel and Walgreens and replace them with Hood, Coinbase, and AppLovin. If Coin gets in before Hood, I think that would be really stupid. Like, I don't think Coinbase deserves it over Robinhood, but it would give, Robinhood more time to execute and show that they deserve to be in it. But I really would be surprised if they pick Coinbase over Robinhood. Like, that's just a weird one. If the committee decides to go with a 100% crypto proxy versus an actual diversified business in Robinhood. So I guess we'll see at 5 o'clock which ones they pick, but those are the ones that are up to get in. Okay, what else? S&P, are we kind of going green? Jay Powell is talking at 12:30, so he's not talking for a while, but we'll see what he says later in the day. S&P 500 right here at 572. That one is slightly red, but now about to go green in about 50 cents. Robinhood really getting hit. I wonder if that's because of Bitcoin or something else, but maybe the market makers know what they're getting in, so they're dumping it right now so they can buy cheaper. That could be an argument. We saw that with Palantir, dude. Palantir was $29 the day of S&P inclusion. It dumped all the way to 26, and then by 3:40 p.m., 20 minutes before we were going to get the announcement, it magically went up to $29.50 again. And it ended up being green for the day, and then they got in, and then it went to 37, and then the rest is history. So who knows? Maybe we'll see some similar price action today. Palantir kind of green right here, up 0.3%. Walgreens, obviously, they're green since they're getting bought out. Tesla's still red. Grab is red. MicroStrategy is red. NVIDIA is still green, and Broadcom barely holding on to its green, but that one is currently green right now as well. Oh, Robinhood also did have the game yesterday. So if anyone was watching, they were having a game with everyone to the trivia game to deliver to basically give out Bitcoin, and I won $2 in Doge because I lost the game. The question I lost on, to embarrass myself even further, is they said by the end of 2024, what market cap did NVIDIA have? And I picked 2 trillion instead of 3 trillion. So that's the question I lost on. So I think that was the 7th question that I lost on. But I got some Dogecoin, at least for playing. For those that won, they got about $1,300 in Bitcoin. Jason was one of the winners. He was live with us yesterday as well. And they split $1 million of Bitcoin. So the point is, they're just being so innovative in their marketing, and it's so exciting to see them give back this money to their users. And it's forming a really good relationship with people that are Robinhood Gold subscribers. They're probably going to get a ton of Robinhood Gold subscribers because of these giveaways. And it's just really engaging content, and it's marketing. So really, really awesome stuff by Robinhood, and I think that will continue to expand the level of gold adoption they have on the platform as well. SoFi is almost 11. Really? Holy crap, dude. Oh my. We have not seen SoFi get hit like this in a while. Holy crap, dude. Believe it or not, that $2 in Dogecoin was more money than I've made this whole month in the stock market. So I'm very appreciative to Robinhood on that $2. Wow. Do you guys think SoFi gets below 12? I don't know if they take it below 12, bro. Taking it below 12 would be kind of aggressive. If they take it below 12, I'm going to have to buy some. If they really get us at like 1180, 1190, I think that would be aggressive. Who buys SoFi if we go below 12? Does anyone nibble at that dip? I think I would buy 100 shares there if we get below 12. Dude, if they actually take us there, that to me is more algos. I don't think there's a reason for SoFi to sell off to those levels. Fear and greed is at extreme fear. We're still at 18. We've been at extreme fear for a while now. Currently still at extreme fear. Yeah, I mean, selling a put at 10 if it gets to 11 or 1150. I mean, that's again, you got to be happy. That's the best time to sell a put. The best time to sell a put is when the stock is already down so much. You believe in the company. It's not down because it's a shitco. It's down because of whatever macro reason, or, even if they had a bad earnings or something, right? But if you believe in the long-term potential of the company, if you can sell a put at an attractive level that you want to buy it at, you will feel more than happy to get assigned those shares. And then again, you can sell covered calls against those shares, and it should be at a level that's so low that it shouldn't necessarily keep going lower, which would ruin your ability to keep selling covered calls against it. So yeah, if SoFi gets down to 11, we'll see if those covered calls at 10 make sense right here. By the way, guys, options for this Saturday is not going to be happening with Jason. The reason for that is because Jason's wife is a bit sick, and they have a hospital visit on Saturday. So we are not going to be able to do it this Saturday. Hopefully next Saturday works. I'll be back from where I'm traveling to on Friday night. So next Saturday, I think we'll be able to do it. But yeah, Jason's confirmed for it. It's just this Saturday he can't do it. So next Saturday, we should be good for options 201. S&P's at 572, just turning green. Tesla 264. Walgreens up 7%. Again, Palantir up 2%. Palantir actually getting a bid right here. Interesting. Maybe it's because of the Titan contract, potentially. But Palantir is getting green. The Art of Teaching, thank you for the $5 super chat. Hey, Amit, might be a dumb question, but isn't S&P inclusion usually the third Friday of the month? I couldn't find it on the website. It is. That's the rebalance. The announcement of the candidates are on the first Friday. So the actual rebalance happens on the third Friday. I know it's confusing for a lot of people, but the announcement happens on the first Friday of every third month. So we'll find out today. We are going to find out today. Yeah, dude, it's like weird. It's like flattish green across the entire market. You got Nvidia and Broadcom. Broadcom actually trying to go back up to 6%. Nvidia's pumping 2% because of Broadcom, in my opinion. HIMS just went green. Apple just went green. Bitcoin trying to get back to 89.5. Palantir is holding up. Tesla just went green. Robinhood should be going green if some of these other stocks are going green. The S&P just went green. SoFi looks like maybe we bottomed at 1214. We'll see if it gets below. And then Intel goes green. Where are the rest of the semis? Wow, semis are all green except Dell and Marvell. That's it. Qualcomm, Broadcom, ASML, Intel, SMCI, which has been a disaster this week. That one's green. AMD is green. So we are seeing pockets of green. We got about, I don't know, 10 minutes until we usually dump at around 9:50. What did you guys say on the poll? On the poll, you guys said 77% of you said yes. We go red 15 minutes after the market open. All right, so we're about 3 minutes away from 15 minutes. We'll see if we actually end up going red. But we are kind of green right now. PayPal, $68. That's dude. PayPal's gonna buy back their entire company at this point. Like, I feel like there's got to be a bull case for PayPal. But then every time I think of buying PayPal, I'm like, I could just buy more Hood. It's just like I don't know the benefit I get from buying PayPal because there's not a dividend. If PayPal gave a dividend at these levels, I would seriously think of establishing a real position. Because at 68, it's, in my opinion, egregiously undervalued. I think fair value is closer to at least 95. I would be really patient if they paid me a dividend. But if I'm only looking for capital appreciation, the narrative on PayPal is kind of not good. And the growth is not good either. It's enough growth to justify a higher stock price than this, but it's not like growth that's exciting at all. So I would need a dividend to get more excited about PayPal. Albert, thank you for the gifted 20 memberships. Appreciate that, Albert. That is very nice. A bunch of you guys just got a gifted membership. Randy got a membership. Gary, Nathan, Mike, Trey, Jason, Jerome. All of you guys just got some free gifted memberships courtesy of Albert. Albert, thank you for that. Really appreciate it. And thank you for being here. Part of the show as well. We got Erin in the chat. She says, I finally trimmed the PayPal position. It's done, it's done nothing but piss me off. Yeah, I can imagine. Dude. I trimmed my PayPal position for a loss like October 2023. I was just getting so annoyed. I was like, you know what? This is stupid. Like, we're done. And it's done nothing since then, dude. It pumped a little bit at one point, and then the last earnings, they just didn't show enough growth, and then it tanked. So a dividend would get me interested, but the buybacks don't get me interested because even though they're buying back their stock, like that's not helping you because it's not getting the stock to go higher because they're buying it back from people that are selling it to them. And there's enough people selling it versus enough people buying it with them to keep the stock flat. And so at this point, you know, the dividend would actually get me excited, but that's not the route that PayPal is going at. That's how I feel about SoFi. Yeah, well, SoFi actually is growing though. That's the difference. SoFi, I know SoFi stock has been stuck, and again, if you know how to wheel, SoFi's been like just paradise for anyone who's wheeling. Like SoFi's been great for wheeling. So I think that's one way to handle it. PayPal's premiums suck because there's not enough gamblers with PayPal. There's a ton of gamblers with SoFi, not with PayPal. But SoFi does have growth. I still think $20 by the end of the year. I think that's very possible. I also need it to happen because I have some options that have a strike price of 20. So that's my price target. It's like, what's your price target? Well, the strike price on my call option is 20. So I'm thinking my price target is 20. That's what I'm talking about. Dude, I was on a Rocket Lab Spaces the other day, and I don't know that much about Rocket Lab, but they wanted me to come on and just give some thoughts. And then the guy was like, well, what's your price target on Rocket Lab? And I'm like, my price target on Rocket Lab is higher. I was like, it's up. That's my price target. Because I don't have a price. I don't know what Rocket Lab should be like. So I was like, I think it should be higher. I think it should be a little bit higher than here. I think that's a good price target. So, which is not lying. I do think Rocket Lab should be higher, but like, I have no idea, dude. I don't know how to value Rocket Lab. So I don't know. In general, in all seriousness, I do think SoFi closer to 2025 by the end of the year. I mean, they're going to be profitable again, 80 cents of EPS. Full year of 30% revenue growth again, or I think 27% revenue they guided. They're probably conservatively guiding that. So I think SoFi should be okay. And the best thing is if you buy a ton of SoFi shares, you can sell calls against it if it's flat. So you don't have to be sitting on dead money because there's plenty of gamblers that want to buy up SoFi. Is that an example of BSing and answering debate? Yes, exactly. But you have to make it funny. That's what helps with the BSing. It's like, can you add a little bit of humor to it to keep it going? Enphase is up 5%. Interesting. So you got Enphase with some love right here. That's up 5%. Oil prices again are down. At what level do you buy more Grab? It would be here at 450. I just have enough, so I really don't need more. I've been buying the past couple of weeks anyway, but 450 and below is where I buy. And every day it gets there, then it bounces back up to 480, then it comes back down. It's kind of the same game with Grab as the whole market's been playing up and down intraday. But these would be the levels that I get excited to add more to it. Robinhood's metrics come out on March 11th. So next Tuesday. Next Tuesday, we will get those announcements. Yeah, HPE, they had a crappy earnings as well. I mean, I don't want to say it's a crappy earnings, but their guidance was not as good as the street wanted. They're down about 15% as well. So that one got hit at the end of the day yesterday. Big Bear AI, how bad is that getting hit? BBAI, wow, 20%. All right, who's buying the dip on that one? Who's buying the dip on that one? See, again, Big Bear AI is not a company that's not real, right? It's not like Faraday Future or something. It's a real company. They have real contracts. It just, it might have got expensive when it got to $10. I think that's the main thing about it. Sometimes the expectations just get too high and the company can't live up to it. And it's really not even their fault, dude. They're trying to execute, but the market wants a little bit too much out of them in certain moments. But that one is down about 20% here right now. Celsius is up 4%. Okay, so that one's getting something. See, there's weird stocks that are up today and then weird ones that are like, why is Celsius up 4%? But SoFi's down. SoFi should be up, dude. Lending Tree had a great earnings and they're giving out a ton of loans. Like, if that's not bullish for SoFi, I don't know what is. So that's what makes me feel a lot of this is a little bit more algorithmic. SoFi is a very popular stock, and so the algorithms love to tag on to those names. Celsius right here up 4% of the day. Big Bear AI still down 18.9%. Bitcoin at 91. All right, Bitcoin getting some love. There you go. 91,000. Again, that crypto reserve, I don't think it was that big of a news yesterday, but I guess we'll find out more details on it. Again, for the people saying we're going to sell gold to buy Bitcoin, I really don't agree with you. I would be willing to bet a lot of money the United States federal government is not going to sell gold from Fort Knox to buy Bitcoin. I just don't think that's going to happen. I don't think they have the political capital to do that. I don't think that's a popular opinion. For the Bitcoiners, that's a popular. Bitcoiners would want us to sell all of our gold for digital gold, but the majority of Americans would not want that. So I think they're going to have to find a more creative way to get this done. But I don't think it's going to be from gold. Okay, we got a new quote from Trump right here. I am strongly considering large-scale banking sanctions and tariffs on Russia until the ceasefire. Let me pull up the quote where he said that. I think he put that on Truth Social. Yeah, okay, so this is what Trump said. Trump just said, based on the fact that Russia is absolutely pounding Ukraine on the battlefield right now, I'm strongly considering large-scale banking sanctions and tariffs on Russia until a ceasefire and final settlement agreement on peace is reached. To Russia and Ukraine, get to the table right now before it is too late. Okay. We already have sanctions on Russia. It looks like Trump's wanting to expand those sanctions to the banking sector at a bit more of an aggressive rate. This is the first time in a couple of days that it's a little bit more him versus Russia versus him versus Ukraine. So we're seeing him kind of play both sides right here. But I guess we will see how Russia responds to all these tariffs and if they put out an official statement pretty soon. Palantir right here, 83. That's up 3%. Palantir holding up. Robinhood getting ready to go green. That's down only 0.5%. Broadcom up 6%. Nvidia up 2%. 113 on Nvidia. HIMS up 2% as well. AMD's up 0.5%. The entire market's starting to get a little bit more green. SoFi just went green as well. And the S&P 500 now up 0.5%. Yeah, Russia's already sanctioned to an extent. So I don't know what he's talking about in terms of more sanctions. We're going to have to, I'm sure there's probably more sanctions they can put on Russia, but they're already pretty heavily sanctioned. So we're going to have to see what specific policies he has and what their statement is as well. Robinhood dropped something in 10 minutes. I think you are right about that. So they're doing these mystery drops on the app right now for Gold Month, which is the month of March for their gold event. That's happening March 26th. I'm going to be at that event in San Francisco. Yeah, in 9 minutes, it says we're about to drop our first offer. I don't know what the offer is, but it's something. I don't think it's a giveaway. I think it's like, I don't know, maybe it's like a free year of gold if you do XYZ. I don't know. I have no idea what a drop means, but in 9 minutes, they're going to be dropping something. And we're going to see what that looks like. All right. What other news do we have going across the board? We talked about Palantir. We talked about Titan. We talked about the jobless or the jobs data with the NFP payrolls, which was really good. We needed that data to come in much better than expected, or at least right at the levels that we needed them to be at. We'll have Dan Ives on in a little bit, talking a little bit more about what's going on with the sell-off. He continues to remain bullish on Tesla. Oh, speaking of Dan Ives, he did add Tesla to his top picks of 2025, and he is reiterating them as an absolute table pounder. So here's what Dan Ives said yesterday on X. Investors are asking us, will Tesla lose market share against rising competition? And is the start of Musk's distraction with Doge a brand issue for Tesla? Our response: this is the start of the biggest innovation and technology cycle in Tesla's history ahead for the next few years. First, we expect a lower sub-cost $35,000 new model before the summer that will help drive pent-up EV consumer demand globally and get Tesla back on the growth track and heading towards a 2 million run rate delivery trajectory. The launching of unsupervised FSD in Austin, Texas this June kicks off the autonomous era at Tesla that we value at $1 trillion alone on the sum of the parts valuation. Autonomous will be the biggest transformation to the auto industry in the modern day history in our view, and Tesla will own the autonomous market in the US and globally. We believe Autonomous and Optimus will represent 90% of the valuation of the Tesla story and create a company with a valuation that exceeds $2 trillion. And then on Doge, they basically said it's not that serious, even though Elon is distracted. We continue to believe that the best thing that ever happened to Musk and Tesla was Trump in the White House, as this will create a deregulatory environment with federal autonomous roadmap central to the Tesla golden strategic vision. So yeah, they're bullish on Tesla still. And Dan is probably going to reiterate that later here today. S&P 500 going green, up 0.5%. The Qs are green as well, up 1%. They got hit badly yesterday, down 3%. So it's nice to see the Qs get a little bit of relief, at least in the moment. Nike as well, going green. Nike's been green for a while. Again, I don't love the Nike story right here. You get a 2% dividend to wait. Obviously, Bill Ackman is in this with you, and he thinks it's probably going much higher than $78. I think he bought in around 67, 72. I do think there are some better opportunities than Nike, but in an environment where value matters more than growth, I think that's why Nike is catching a bid here right now. One thing is that if growth starts getting a bid again, the Nvidias, the Teslas of the world, et cetera, I think a lot of these value stocks go down the drain. The Verizons, the Nike, et cetera. So like right now they're getting some momentum because everyone's trying to get defensive. But if that switches, and that can switch pretty quickly, but if that does, Robinhood just went green as well. I think people sell those names off immediately because ultimately they still want to be in growth at the end of the day. Yeah, we'll watch a segment on CNBC when he's on in a little bit. And we'll see what Dan has to say. Steve can't talk right now. He'll be on the market close, though. Steve will be on the market close. His NVIDIA article just got editor's pick on Seeking Alpha, which is like basically the best article of the month. So we'll be discussing NVIDIA, the markets, etc. His thoughts on tariffs, but he'll be on the market close. And then again, we have S&P inclusion at 5 p.m. We'll see if Robinhood gets in. All right, so the entire market's going green right here. I don't know if I want to believe it. Even small caps are green on the day. I mean, we'll see in the next 20 minutes if it holds. Bitcoin as well at 91. That's not bad. That's pretty bullish. But we got to see if it can stay at these levels. Call Pelosi. Yes, I would love to call Pelosi if I could ask her what's going on. You know, Pelosi's down on all of her positions. All of them. All of them. And so, I mean, NVIDIA, Google, all of them. She bought all these in the money call options that are just red. So she's having pain with all of us. The only one she's not down on is Tempest because this thing just keeps pumping. Wow, it's down though, dude. It was at 80 at one point, right? This thing was at 91. It's down at 50, dude. That's almost a 50% correction. That's not, I mean, her calls are at 25 strike, but this thing got overextended in February. $91, dude. I don't think anyone really even understands Tempest. They just bought it because of Pelosi. But yeah, that one pretty big retracement right there. Dude, if we get a 13F with Nancy buying Euro defense stocks or something, like if we find out Nancy's long Rheinmetall, that would be wild, bro. That would be wild. It's like, well, she completely pivoted. And she's in Europe now as well. 44.93 on Hood. That's up 1/3%. MicroStrategy as well goes green. Palantir holding on, dude. 3%. That's not bad in this market to get that 3% after a 10% day yesterday. It's nice to see Palantir get that 3%. We do have some news on the NASDAQ. They are thinking of going 24 hours as well. So we see Robinhood doing this. Schwab has started to adopt this. The NYSE has adopted 24-hour markets. It looks like the NASDAQ is going to join exchanges seeking to offer round-the-clock trading, and this will capitalize on the growing global demand for U.S. stocks. This is good for Hood. This just means there's more liquidity for the 24-hour markets, which means you get better spreads and better prices on your trading. And then, obviously, if more people are trading, that's good for trading volumes on Robinhood as well. So another exchange that is continuing to fuel the demand for the junkies at 3 a.m. that want to buy stocks. Put in the chat if you've bought a stock at like a weird hour, like at like 10:50 p.m. Like you're about to go to sleep and you just open up your brokerage app and you're like, I'm going to buy some more Google. The weirdest time I bought Palantir on a plane coming back from AIPCon. I think it was like $37 or something. And it was in the sky and the Wi-Fi was working. And I was like, it wouldn't be cool if I buy some stocks on the plane, and it worked. So I feel like that's the coolest place where I've like bought a stock. Wow, a lot of you have. Okay, that's a decent amount of people that have bought some stocks. It's so crazy, right? When you're buying stocks, it's like thousands of dollars, right? Tens of thousands of dollars. And it's just swiping up, and then boom, it's there. You know, it kind of makes you like look back, like, dude, I'm about to spend like $5,000, and just boop, there you go, 5,000. It's like the average person can't just spend, forget it, 5,000. We have like a couple $100 just like that, you know. But that's what we do. Oh, we got some tariff updates. Hold on. We got some tariff updates. Oh my God. We need a button for tariffs. We need a button on the soundboard for tariffs because this is what we're dealing with. Oh my goodness. Bloomberg. Trump says tariffs on Mexico and Canada could go higher than the 25% rate imposed earlier this week. Okay, I'm not buying that. I'm not buying that. That's BS. That is absolute. I'm not buying that. I don't think the market is the market really buying that right now. Are we really dumping up? We are getting a little red candle. We are getting it. It is there right on time, 10 a.m. right on time. Now, if the market was smart and if the market actually, you know, like cared about their or developed a thesis about the boy who cried tariffs, which is my thesis on this whole tariff situation, I think they would not believe this for a second. There is no way that we are going to have higher than 25% tariffs on Mexico and Canada. Why? Because we're not even imposing the 25% tariffs that we have on Mexico and Canada. Yeah, bro's just yapping at this point, bro. Like what? We're going to do 30% tariffs, 40% tariffs? No, we're not. No, we're not. I don't believe that for 1 second. Look at that red candle on the S&P just because of that. Just because of that statement. We know that statement's not true. There's no way. There's no way. Or at least I don't believe it's true. Reuters posted that story at 7 a.m. Yeah, but Bloomberg's reporting it right now. Like if it goes to the Bloomberg terminal right now, that's what matters. And I think I'm seeing a lot of accounts post the same thing. So it's going through the terminal right now. I guess that's why the market's reacting to it. If they didn't react to it at 7 a.m. It explains the red candle, but like I just don't believe it, dude. What are we gonna do? Like 80% tariffs? Like this is stupid, bro. Like this 25% is already insanity. That's a pretty high amount to charge for tariffs. I don't think it's gonna be that much higher. Okay, we're doing this gold drop. Hold on, let me open up Robinhood. They're doing the gold drop. Okay, let me open it up. 1,000 gold bars, 1,000 winners. Deposit for a chance to win. Every dollar you deposit is an entry to win. More deposits equal more entries. Hold your deposits. To keep your entries, hold your deposits on Robinhood. Winners announced on April 21st. One lucky member gets a 1 kilogram gold bar and 999 members get a 2.5 gram bar of gold. Dude. This is so cool. This is so cool. So they're giving away 1,000 gold bars to 1,000 winners, and every dollar you deposit gives you a chance in like a lottery system to get a higher probability of winning a gold bar. So if you deposit $100,000, you basically have 100,000 tickets that are randomly into this lottery of getting your number picked on winning a gold bar. And one person gets 1 kilogram, 999 people get 2.5 gram bars of gold. This is cool. This is really cool. Again, they're taking marketing to the next level. What does this mean for investors? This should be music to your ears because what does this mean? It means more deposits, more and more deposits. And even if it's like a fun little way to get more deposits into the platform, this is what you have to do if you're a tech company. If you're a tech company, you need to find a way to continuously get more deposits onto your platform and deepen the relationship you have with consumers. So it's creative. That's the cool thing about it. It's creative. Yeah, we're getting a black screen. Hold on. StreamYard's being stupid again. Let me pull this up right here. Okay, it should be good now. It should be good now. It should be fixed now. Yeah, cool. That's not too bad. Wow, so you can deposit as much as you want too. So it's over the next month, until March 31st. So basically we have a month to do as many deposits as possible, and that would enter you into the gold thing. All right, cool. But going back to the tariffs thing, yeah, I don't think we're having 30% tariffs, dude. I don't think we're having more than 25%. And I think the market's going to ignore it. I know they just slightly had a red candle on that, but I think they're going to come back because if that's the news to go red on, at this point, it's just not believable. None of the tariff stuff is believable right now. We need to get a button for tariffs, though. We need to get a button as soon as we get tariff news, because I'm sure the tariff news will continue to happen. We need to have a button to play on that. All right, let's get an update. I think we'll have Dan Ives on CNBC in a second, and let's see some of the headlines they have going on right now.
More on the Tesla trade coming up as well and what to do there. And then some big sector moves this week. Banks on pace for their worst week since August 2024. Energy and consumer discretionary on track for their worst weeks since 2023. amid all of the back and forth over trade concerns, weakness in the economy. We did get the jobs data, and I do think it's a relief, the jobs data for February, because it wasn't weaker. And the fact that we did see job growth in key parts of the economy, that was good. 151,000 jobs in February. It was less than the consensus at 160,000. The unemployment rate did rise to 4.1%. That was also a bit of a surprise. Consensus was 4%. Average hourly earnings, and this is important because we're on inflation watch, they matched expectations, only rising 0.3% for the month. And also, importantly, the increase in January, which was a very hot wage number, was revised a little bit lower to 0.4%. Where the jobs were, well, healthcare, biggest job creator, again, financial activities, transportation and warehousing, social assistance. Where they weren't, retail, food and beverage retailers, and then, so federal government subtracted 10,000 jobs, but government payrolls overall were up 11,000 jobs thanks to state and local governments, which I think came as a bit of a surprise, but also might be stale. There's the DOGE impact on the federal workforce, down 10,000. I'll just dive a little bit deeper, guys. There are some points of weakness to pay attention to. Overall, not a terrible number, doesn't change anything for the Fed, which is firmly on pause. However, so the rise in the unemployment rate we talked about, it reflects more people who permanently lost their job, and also the participation rate fell by 0.2 points. So it's not like it rose for the right reasons. It rose showing some weakness. Joblessness was particularly notable among Hispanic people and those without a high school diploma. Interesting. The number of people working part-time for economic reasons actually surged. We're at a 4-year high on that number. And then, David, the number of Americans holding multiple jobs, which is also kind of a sign of weakness, climbed to a record high, nearly 8.9 million people. So just some things to be aware of as we try to figure out where we are in this cycle.
And to the extent that there is any reflection of the DOGE efforts in this report, not much?
A little bit, 10,000 subtraction from the federal workforce. This is, again, the February number, but not much. That number should go up. It was, I think the most surprising was that state and local kind of added, and then we got a net positive on that number because that number should subtract. But a lot of the research and the economists who've been writing on the DOGE impact show that the percentage of the federal workforce as a percent of the overall labor force has been declining. And so it might not be material. Now, if you combine that, though, with what we're seeing in the private sector, which we have seen a step up in layoffs announced, you know, a few thousand here, a few thousand there. We're going to talk to HPE CEO next hour.
Well, Challenger yesterday was multi-year high, yeah.
So then that, you know, combined with some of these efforts doesn't bode well for future jobs reports. But so far, this report supports the soft landing kind of theory on the economy.
Although Santelli made a point to mention work week.
Costco's down on the day, folks. Costco is, wow, Costco's getting hit for the first time in a while. Costco down 5%. Why is Costco down 5%? Their earnings were not bad. Is the market finally realizing 50 times earnings is a little bit too much for Costco? Is that why? Everything else is green, though. Everything else is pretty green. We'll probably have Dan Ives in a second on CNBC, and we'll get his thoughts on Tesla. But everything else is green. Tesla's basically flat. Microsoft's flat as well. Actually, Microsoft's down 1%. Apple's green, 1%. Meta's green. Google's green. Amazon's green. Nvidia's green. We're getting green across a lot of these tech names. Palantir's up 3%. Robinhood's green. But Costco's down. Again, Costco's earnings were good. You can't give me an earnings reason for what. I mean, they missed on EPS by 5 cents, but that's not the reason. It would have to be something else. Is there a headline on Costco that we missed? Is there something else going on here? Or again, it's just people dumping it because it's expensive. No, I don't see anything. I don't see anything here that's a headline that would get Costco to go down. How many people shop at Costco every week or every month? Do you guys go to Costco like often? Or do you do your stuff at like a local store, like a Walmart or like a ShopRite? In New Jersey, we have ShopRite. I don't know if that's national, but we have ShopRite here. Yeah, we got a lot of yeses right here. A lot of people go to Costco. Wow. I live near the headquarters. Damn, 4 times a month, bro. Holy crap. That's a lot of Costco. I don't go to Costco as I used to go when I was little, like with my mom. I would go more often. And when I found out about their food court and the pizza and the hot dog and the churros, which they got rid of now with the cookie, which, look, the cookie's good, but the churros were amazing. Yeah, that's when I remember when I was a kid, I loved Costco. The pumpkin pies before Thanksgiving, like it really is like it was a staple of growing up when it came to like shopping for holidays and stuff like that. Palantir still green, up 2%. Bitcoin as well, holding 90.5. I just don't know if it's worth 50 times earnings. That's all. Matt says the Froyo. Yeah, the Froyo. I never really was a big fan of the Froyo. I would get the Churro more, but a lot of people, my sister loved the Froyo. Like there's just always that one thing that you knew you had to get from Costco if you visit. Oh, and the free samples. Yeah. I mean, that goes without saying. The free samples were incredible because Costco actually sold like good stuff when it came to like frozen things you could heat up and stuff. And so their samples were actually good. Amid with everything Hood has been doing, how in the hell is it struggling so bad to stay green? Okay, so that's a good question. Again, the reason why Hood is struggling to stay green is because this market is incredibly volatile and Robinhood makes money off of trading volumes. Trading volumes go up in a volatile market, but it doesn't necessarily mean that the overall product or the overall company is growing, because long-term you need a bullish backdrop for Robinhood to have sustained growth. Now, granted, based on the February data we already have, we're going to get the exact numbers on Tuesday. I think that February has been really good. And January, we already know was really good. So now we just need March to be decent to have a good quarter. I don't know if March is going to be that much better than February, given we are seeing a lot more weakness and people might not just be trading as much. But Robinhood's already up 20% year to date. So that's one reason why they're still red. And second of all, the market's not going to give them any multiple expansion on all these good things they're doing until they see it result in growth, which I think it will. But they want to see it because they can't just artificially give it to them in one of the most volatile markets we've had in basically 2 years, right? Since 2023. So I'm even surprised Robinhood's holding up in the 40s, bro. Like, I mean, like it hasn't touched below 42. And so we'll see if it can stay above it. But the fact that it's holding this multiple to me is actually pretty encouraging. S&P 500, 574, that is green. Currently right now, yeah, Robinhood's using Costco techniques. That is also correct. Robinhood is using Costco techniques with their gold subscribers. And that's what Vlad said. Vlad said on the podcast with me a month ago or 12 months ago in February that they want to be the Costco subscription of consumer finance. Rocket Lab's down about 1%. SoFi is up 0.5%. Costco's still down 6%. I really don't know what's causing that. That is weird. You don't see Costco go down like that easily. But that is weird. All right, let's get an update on Tesla now, and then we'll keep going from there.
His outperform rating is intact, target of 550. Joining us here at Post 9 this morning is Dan Ives, Wedbush Securities Global Head of Securities. Dan, good to see you.
Yeah,
Happy
great to
Friday.
be here.
Was this a tough call? A tough reiteration?
I mean, to some extent, I think this sell-off is going to be an opportunity. I think years from now, it's a generational opportunity. Because it's my view, I get, you know, in terms of all the frustration, noise, the Doge, the distractions, the brand issues, even some of the sales numbers that we've seen in Europe, China, I think it's going to be short-lived. I mean, my view is they have probably from a technology perspective in terms of autonomous, in terms of the lower-cost vehicle, and where I see things over the next 12 to 18 months, I think they're actually going to go in to their biggest part of their technology cycle that they've had, maybe forever, maybe in the last decade.
Does that require Elon to distance himself from the brand or recommit himself to the brand?
Look, I think this is one where I continue to believe the bet for the ages was Musk's bet on Trump because of autonomous, deregulatory, and I believe autonomous is worth ultimately $1 trillion alone to the ultimate story. From a brand perspective, look, we think about 10 to 15% of maybe the sales decline is related to some of the brand issues. But based on all of our survey work, we think only about less than 5% of Tesla holders today, so Tesla owners, will ultimately think twice, potentially, from a brand perspective because of Musk. So that's still pretty limited relative to where I view actually the whole growth opportunity.
What about the whole distraction? I mean, he's always had a lot of jobs and a lot of CEO roles, and so this has always been a constant question. But now that he's spending so much time in Washington with the president, you know, working on Doge, does that make you wonder about his running it?
Yeah, look, we went through similar things when it came to Twitter X. I mean, we've gone through other situations as we've talked about. I believe this is something where 3-6 months from now, I think you'll see him a lot more dialed into Tesla in terms of as we go into FSD, as we go into autonomous. I also think, perception's reality, and I get that, but from all the work that we've done talking to people at Tesla, I actually think he is driving a lot of the bigger initiatives at Tesla, despite the view that he's basically 110% into Doge, and that's where all of his time is.
Where do you come up with this 5% number? I only ask that in terms of people who might change because, typically I think it's fair to say his customer has been sort of center left, let's say.
Sure.
They've been environmentally focused. Republicans, perhaps not as much so, at least in certain parts, and so less likely to buy one. I don't know. The Journal today, the story, they cite a lot of people. It's anecdotal saying, I'm going to give it up at the end of the lease. Where do you come up with 5%?
Yeah, for us, 1,000 Tesla owners, it's less than 5%.
So you did a survey of 1,000
so to me, of 1,000 customers, less. And I could also tell you, this is something, as I've talked to others at dealerships, whether it's in Europe, what we've seen even in China and what I believe we're going to see in the U.S., I get the brand words. It is a dark time right now for Tesla bulls. But to me, it is not the time to head for the hills. This is actually the time to double down. The reason we add to the top picks was I think we look out 6, 12 months now. I think this is ultimately, the stock is a double.
Right.
Over the
but
next
not on cars, though, right? Is it on Optimus? What's it on?
I think 90% of the value is going to be autonomous and Optimus driven. I think autonomous itself is worth more value than all of Tesla today. And I just think as we've gone through many periods, despite the frustration over the years, that has always been the opportunity. And I just think right now we are going into what could be actually the biggest golden path for Musk and Tesla, despite right now what feels like a white knuckle moment, just bad news after bad news.
You're right. There have been those moments in the past, and the stock has recovered. Dan, we got to keep it a little tight today. It's good to see you.
No,
thanks for coming in, Dan Ives.
Helping the market lift a little bit. Getting some new details around tariffs this morning.
Okay, we'll go back to the tariffs thing. But who agrees with Mr. Ives right there on this being a white knuckle moment? 59% of you say yes, we agree with him. I mean, look, his take is not like if it's long term, like it's the same take that I think he's always had. It's nothing unique there. Why is Costco down 7%, bro? Someone's got to find out why is Costco tanking today. Steve's gonna be very happy about this one. But look, his take around Tesla is autonomy is the future. I don't think anyone can disagree with that, unless you just don't believe in FSD. But short term, the brand damage, the Doge stuff, that's Dan's acknowledging it's gonna be hyper volatile. But it's a generational opportunity if you want to get a massive discount against the FSD story. Question is just how much of a discount does that end up becoming? Jeremy sold Costco. Jeremy owned Costco. Did he have Costco? This is weird, dude. I know in general Costco's expensive, so I get that one day it was bound to fall, but why today? I mean, it didn't fall on earnings 2 days ago, so why today in the morning is it falling? Maybe they got a downgrade. Maybe that's what happened. Oh, he sold Costco puts. Oh, does anyone know what strike he sold them at? Okay, so he's going to be getting assigned on Costco, more likely if it's in the money. Granted, it's down 7%. So if he sold them, out of the money 10%, then he's probably still safe right here. Yeah, it's weird. I'm still not getting any updates. No downgrades, upgrades, anything like that. No, he bought puts. Wait, what are you guys saying? He bought. Okay, he bought puts. Okay. Some of you guys said sold puts. That's why I was thinking of different. He bought puts. Okay, so that's good then. He's making money then on Costco. Honestly, bro, I should have bought some puts on Costco. Steve should have too. Steve's gonna be so happy. Let me see. Let's see if Steve picks up. I don't think he's gonna be able to pick up, but let's see. Just to tell him the news about Costco being down. He would be so happy. Oh, he bought his sold puts? Wait, what the heck? Oh my gosh. What did he do? Wait, let's talk to Steve. Steve, good morning. Do you have 10 minutes to talk to everyone on the show?
Hold on. I have exactly 13 minutes.
Oh, wow. We get you for 13. All right. I love it.
Well, you have me for 12 because I need to sign to a meeting at 10:30.
Okay. So I have some breaking news for you.
Okay.
Guess what stock is down almost 7% today?
I have no idea. Palantir?
No, I think this is going to make you feel better than Palantir.
Tesla?
No. Why do you want Tesla to be? No, this is going to make you feel even better.
Costco?
Costco's down 7% on the
Let's
day.
go. Let's go.
So, are we buying the dip?
No.
Why?
It is so overvalued. People thought I was crazy when I was talking about Costco being overvalued, but people must not like making profits. It was at the time when I started this whole thing, it was the 19th largest company in the S&P 500, and it was doing less than $8 billion of net income. Now, that was before they reported. They just reported. I'm actually not sure what the new number is, so I'm going to look it up right now so nobody can say that I'm not being fair.
They missed on EPS by 5 cents, but it wasn't, it wasn't that crazy.
So so they are 7.62 billion in net income, unless it's not updated. So yeah, it's drastically overvalued. It's still trading at, it's not $66 today. Maybe I know how to look at fundamentals. I don't.
So when are we buying the dip?
We're not.
Why not?
Well, because it's still trading at 57 times this year's earnings.
Okay.
It's got a 2% profit margin.
Well, if you're selling a glizzy for $1.50, you're probably not going to make a profit on it. So.
Well, they should. If this gets down to like 400, then we can start having a conversation.
Yeah, that's fair. That's fair. Okay, so I know you'll be on the market close later to talk about your NVIDIA article. I'm putting it right here in the chat. This got editor's pick. Can you explain what does editor's pick mean on Seeking Alpha?
They thought it was good.
I hate you so much, bro. I hate you so much.
My eggs are so good. It's unbelievable.
How much did you pay for them?
I don't know. Our general counsel and I just went and got breakfast and brought it back to the office.
Okay, well, I imagine.
I'm actually in the middle of eating it. It's delicious.
So it's very exciting, right?
Yes, exciting.
It's very exciting. Okay, so in general, so you have the top-rated article on Seeking Alpha when it comes to NVIDIA. NVIDIA right here is up about 1%. Tariffs are delayed as of yesterday. Trump again said today he thinks that he can do more than 25% on Mexico and Canada. That came out about an hour ago. What are your general thoughts right now on this tariff volatility that we're seeing?
It's a negotiating tactic. This can change 10 times to Sunday. I don't think people should get too worried about it. Companies that are strong, that have moats, are going to be fine. It's not something I'm really that worried about.
What do you think of the actual volatility that it's creating constantly? Like, does that annoy you as an investor, or are you just...
I'm not a day-to-day investor. I think this is becoming a really good opportunity, and it could keep going down. But I think that this is becoming a very good opportunity for people who were stuck in the whole T-bill and chill methodology. I mean, look, NVIDIA's in a bear market right now. Think about that. NVIDIA is down more than 20% from its highs. As of yesterday, it was down just over 20% year to date.
Yeah, I mean, it's legit had a correction, which is pretty incredible given it's growing a little bit faster than Costco, and their margins are a little bit better than Costco.
Their profit grew by 144% last year. And they added something like 60 billion. I don't have it in front of it. Something like 60 billion in net income. And people are worried. There's not enough supply for the demand for these things. And nobody is talking about how big this is going to be with their new platform for robotics and autonomous driving. We're scratching the surface, and they're still expected to do 50% year-over-year revenue growth this year. Demand is fully taken over how much they can produce.
So when do you think the market? When do you think the market recognizes this? Because all these stats matter. But
this could go down to 90. Who knows? But that doesn't change the fact that NVIDIA is trading at less than 20 times next year's earnings. That's a value stock. And NVIDIA has grown by 50% top line this year. Like something is not correct. NVIDIA should be at 160 months out of it.
What do you think about the Bitcoin strategic reserve that has been announced?
Don't care.
Do you think it's bullish at all, or?
Sure, it's bullish for crypto.
I think they didn't give any details on how they're actually going to buy Bitcoin, which is why I'm a little like, all right, whatever. But yeah, obviously long term should be rather bullish than not.
Yeah, I'm not, it's not something I'm interested in or focused on.
Do you think are you of the same belief of some other people that the tariff volatility is just getting the stock market to be weaker so that the financing of their debt can happen at a more appropriate rate?
I mean, you know what I think. I sent you a text message about it.
Okay, well, I'm asking you to explain your text message on the show to everybody else. You act like you and me are having a private conversation. We're in front of people, so I'm giving you an alley. I want you to oop it. That's what's happening here.
And why were you wearing the Yankees hat the other day? Do you even like the Yankees?
I'm still wearing a Yankees hat right now.
Okay.
Anyway, yeah. Do you think they're trying to refinance the debt? Is that the argument?
So I wouldn't be surprised, and this is me putting my tinfoil hat on and going down a conspiracy road. I would not be surprised, and I'm not saying that this is happening, but let's put that out there. If Trump and his advisors got the idea that, you know what, I can't be reelected again. We have both houses for 2 years, and we can throw the economy into turmoil for 3 to 6 months. The Atlanta Fed just came out with a print. 2.4% is now the revision for negative GDP growth. The Fed's been hawkish. They gave us a hawkish pause. Fed's not listening to the president. President wants lower rates. So maybe they're trying to force the Fed's hand into cutting because we have over $1 trillion in annualized debt or interest on the debt that we have to pay. So you get rates down to that 3% level. Maybe if they can get them down a little lower, who knows? They'll be able to refinance the debt and shave a couple $100 billion off annualized payments and get it back down under the military-industrial complex. I don't think it's a far-fetched idea that they know that everything's going to move with the news cycles and they don't actually have to implement tariffs to make things go crazy. And with the efficiencies that they're cutting jobs, if you have a weak labor market, that goes against half of the Fed's mandate. So technically, they have to do something, even if we don't have inflation, because half their mandate is full employment.
Well, the non-farm payrolls we got today were 150,000. It's not that weak, to be honest.
Okay, but it could get weaker in the next month or two.
Yes.
And the only tool that the Fed has is manipulating interest rates. And when you cut rates, you stimulate the economy because you lower the cost of capital and you incentivize businesses to borrow to expand. And that's really the only way that you're going to get job growth in the U.S. at that point. So I wouldn't be surprised if they have a chaos theory mapped out and they're just doing this on purpose for short-term pain to come out looking like heroes in the end.
So it's par for the course, is what you're trying to say.
I'm just saying that if you're a long-term investor, I wouldn't worry about it if you have quality holdings.
Yeah.
Like anybody buying the S&P, what are you worried about?
Yeah, no, I agree. And it just came below the 200-day moving average. I mean, it could go lower, obviously, but this is usually the spot where it tends to bounce. And so I guess we'll see if it continues to stay at these levels.
Like, here's a question you got to ask, okay? Forget everybody buying individual stocks. Are we in a situation where people are selling their retirement accounts and going to cash?
No.
Because if that answer is no, what are you really worried about? Because to me, that's the ultimate test of fear. Because if people aren't selling VOO and SPY or VTI or target date funds, then they're not really worried about a long-term problem. And don't forget, the market is heavily levered with options, double and triple levered funds. Like, there's a lot of people on margin. There's a lot of leverage in the market, which, could get shaken out by this, which wouldn't be a horrible thing either.
Money market funds did increase last week by 50 billion. So now we have 7.03 trillion on the sidelines.
Makes zero sense.
But I agree with you. Like there's so much, not only money on the sidelines, but there is so much demand for some of these tech stocks that if they get, if Nvidia gets to 90, you've got 7 trillion ready to buy it. You know,
this is what I'll say before I have to go. Anybody going into risk-free assets now is crazy. You missed the boat, and there was never a boat. Getting it, like when you look at it, it was what, the end of 2022 when it crossed over 3%, and then it shot up, and then maybe you got a full year at 5.25 or 5.5, and maybe you were lucky enough to catch it where you got to roll it back in at 5 or 4.75. You got destroyed by the market even in this correction. You could have also picked a number of high-yielding funds and done way better than sitting in cash. And now you're not even getting what you were getting. And if the Fed starts cutting and you're in money markets, it's automatically going to adjust. You're not protected with long duration fixed.
Yep.
The whole thing doesn't make sense to me because you're not making what you could have made just being in an S&P index fund and getting a 1.3% dividend yield, in addition to all the capital appreciation. And you would have got more shares and larger ownership of the best companies by reinvesting that every quarter. It's just the whole T-bill and chill, unless you have tens of millions of dollars and you want to retire and you don't want to deal with any volatility and you want a fixed amount, that's the only time that makes sense. But I have to go. I have to lead a safety committee meeting. I will talk to you later.
All right. Talk to you on the market close. Thanks, Dave. Bye. All right, cool. We got some of Steve's thoughts. I do agree with him here as well. I mean, people that are deciding to sell now, like the time to do that. Even I was talking to Chris yesterday off the stream, and even he said like selling now is just not like the time to sell was 2 weeks ago, which is why it's hard to sell at the top, right? It's like not everyone does it because when things are topping, you don't really know they're topping as easily. But to sell after 30 to 40% down on your favorite names, like the time to sell Rocket Lab was at 29 or 32, I think it got to, not at 16. Like now it's really cheaper after a good earnings, and maybe the stock doesn't reflect it and ultimately bounce back to 29 that quickly. But that doesn't mean you let go of it at 17, 18 bucks, right? So I agree from that perspective. A couple of the stats we looked at yesterday, the first stat was that the 200-day moving average on the S&P 500, the last time we went below that was November 2023. Again, that was the bottom. Technically, October was the bottom, but basically November, right? And we bounced in 2024 was amazing. Granted, we didn't have the threat of tariffs at that time, so we'll see if that continues to be an issue. But that marked a bottom. And then another stat that marks a bottom is that 2 days ago, we had the third highest put volume in options on the S&P 500. The previous 2 times was a bottom. So you've got a couple of and then you have fear and greed at lower levels than August 5th. You've got a decent amount of indicators saying that this is not the time to sell. Granted, history doesn't have to repeat itself. You can make new history, and maybe this time is completely the opposite and things go much lower. But I don't know. I feel like this is net buying time versus net selling time, or at least if it's not net buying time, it's more of a holding time than like, all right, I'm out of the markets, I'm done. Because the time for that was 2 weeks ago. Now every indicator is telling you that actually we're getting closer to a bottom. Nvidia's going red and we're dumping. Of course we're dumping. It's 10:30 right on the dot. Nvidia goes red. There she goes. There she goes. Yeah, Grab getting hit below 450 today. Just demolished. Everything's getting hit pretty bad. Nike was up 2%. Bitcoin's at 91. Now it's at 88. Enphase is actually holding on. SoFi 20 cents away from below 11. Rigetti is somehow green, bro. How the hell is Rigetti green? Does anyone have an explanation for that? One of the most speculative quantum names is holding on to its green. Why is it 10:30? Because usually at 10:30 is when it's just historically we've seen the market start to get hit, at least over the past 7 months. There's some conspiracies around market makers tank the markets at 10:30, yada, yada. But like it has happened a lot of times over the past couple of months, and it has been one of those things that we look forward to in terms of seeing the red. IWM's now going red, down 0.5%. Costco still down 7%. Tesla, wow, below 260. That's a first for 2025. below 260. Oh my, 257. Hoodie getting ready to go below 43. At this point, they should just give us below 40 on Hood. If they're going to tank it, they might as well really tank it. Let us really buy. Wow, NVIDIA below 110. All right, so now here's what we got to look for. Here's what we got to look for. How quickly do we get an intraday bottom? Because although we tank at 10:30, pretty much every day around 11:15 is what I've been noticing. Yesterday was actually 10:45. It was earlier than 11:15. We make an intraday bottom, and then we start to not rally, but we at least don't violate that bottom that we made. So we're getting some pretty aggressive levels right here. Robinhood below 43. Let's see if this lasts for a while or if this reverses in short order. NVIDIA 109.6. We got to go below 109.6 to get below that bottom. Robinhood was 42.88. All of those happened at 10:34. Okay, let's see. Was 10:34 our new low for the day? Where is Palantir? Is Palantir still holding up? Palantir hit at 10:34, $80.90. Right now it bounced up to 81. S&P at 10:34 hit, wow, 569. We're still there. 569.54 was the intraday. Bounced up 40 cents below 570 psychologically. That can definitely be a little damaging to people seeing that. Yeah, now we got to see. Now we got to see if that continues or if we go lower. Damn, dude. Where's Broadcom? Broadcom, I think, is maybe holding on to its green. Broadcom, yeah, barely. 2%. 2%. All right, Robinhood's got 4 cents before it breaks the 10:34 low. NVIDIA's got about 40 cents. Let's see if these guys can break it. It is Friday, right? I mean, we kind of expected it, right? It's Friday. AppLovin's holding on to its green. That's actually good for that. Oh, the final question on the Robinhood giveaway was what stock had the best performance in 2024? And the other reason I would have lost the giveaway yesterday is I would have picked Palantir. The answers were Palantir, AppLovin, and NVIDIA. And I would have picked Palantir, dude. I was so excited when I saw Palantir. I know I would have picked Palantir, even though the answer was AppLovin. Palantir was the best performing S&P stock, but AppLovin was the best performing stock in general. But I wouldn't have done, dude, my glaze for Palantir would have been too strong. I would have picked it. I would have wanted to win the $1 million giveaway on Palantir. I would have been so happy. Maybe it's better that I lost on the NVIDIA question, because if we lost on the Palantir question, I would have been so annoyed. Because, like, it's obviously not Palantir. Like, if you read the question for 2 seconds, like, you know it's not Palantir. But I saw it as an option. I was like, oh, it's Palantir. It's got to be Palantir. But I was wrong on that. For those who got it right, though, AppLovin, that's the answer. It was up 700%. Palantir was up 400% in 2024. NVIDIA, 109.8. We still have to get below 109.6. Oh, Robinhood violated it. All right, Robinhood, 42.73. That's a new intraday low for Hood. That means, wow, dude, as soon as I say that, NVIDIA violates the 10:34 low. This is like, it is so attached to each other. As soon as I see Hood go below 42.60, NVIDIA dumps below 109.6. But now NVIDIA rebounds to 110. And guess what else rebounds? Robinhood to 42.80. I mean, these things work so synonymously with each other, simultaneously, but they work in motion. Celsius is green somehow. Is there some news on Celsius we missed today? Why is Celsius green? Celsius is green, Costco's red, and PayPal's green, and then Enphase is green. Celsius appoints PepsiCo executive to newly created COO position. That's from 2 days ago, though. That's from 2 days ago. It's AI. Dude, they should make an energy drink called AI. Maybe that would be some interesting branding or some interesting marketing. Yeah, that's weird. I don't know why Celsius is up. That's weird. Big Bear AI, 24%. Look out below. Big Bear AI. Goodness gracious. A quarter of that thing got wiped out. No capital gain tax exemptions expected at White House Crypto Reporter Summit. Yeah, I agree. If Punchbowl is saying that, they're a pretty good media source. That makes sense. I don't think they're going to get rid of capital gains tax at the summit. Honestly, I don't think they're going to announce anything at the summit. I think it's going to be a party where they take a lot of photos together. I am really skeptical this summit is anything meaningful. And they're definitely not getting rid of crypto capital gains tax. I mean, that was a pipe dream. At least not yet. That's going to take a lot of political capital to get done. I don't think they announced that here. If they do, I mean, it's really good for crypto, but don't know if they end up doing that. CNBC reports that China's already planning their own Bitcoin reserve. Senator Loomis says that the U.S. Bitcoin reserve will scare China. Well, I don't really know if it's about scaring China. We should want China to have a Bitcoin reserve. That's not the right take there, in my opinion. Like, Bitcoin should be pumping on this if China is actually getting ready to create a reserve, because that's just more buying of Bitcoin. Like, that's just bullish for Bitcoin. I don't think we have to compete with China when it comes to that. We just need more and more countries to buy Bitcoin to pump it up. I don't think China has the same 200,000 Bitcoin we have. I think they have like 50,000 if I'm not wrong, but they do have a chunk of Bitcoin. Also, I don't know why China would get scared of the US. Like, why would they be scared that we have a Bitcoin? Like, what is there to be scared about? Like, there's like, we have a reserve of the most volatile asset in the world that we're not buying more of, but we're not selling any. But like, why would that make them scared? You know? Costco continues to fall, down 7%. Walmart's down 3%. Nvidia still holding on to 110. Did Palantir go red yet? Palantir holding on by a thread to some of its green. Grab is getting demolished today, dude, down 3.4%. Where's Nubank? Nubank, that's actually green, which is nice. Mercado Libre is, wow, down 5%. So some of the international ones getting hit. And then Tesla right here, 257, down as well. Yeah, Powell needs to pump us up, but it's a Friday. I don't know if Powell's going to be able to say enough to get us to pump. Let's get an update on the tariffs, and then we'll keep going from there.
Morning. Let's get to Megan Casella at the White House. Now what, Megan?
Hey, guys, we just had the chance to talk with the National Economic Council Director. That's Kevin Hassett. Was out here talking with reporters. We talked to him about the jobs report and about tariffs. And I asked him specifically about those steel and aluminum tariffs. Those are set to take effect on March 12th next week. They have already been signed into law. Those, of course, were a major point of friction with Canada and Mexico in the first term until those two countries got carve-outs. I asked him now if there would be any exemptions for any countries or any industries for those tariffs next week. Here's what he said. Take a listen.
He really doesn't like the word exemption. If I walk in and offer an exemption, then I'll probably get kicked out of the office. We'll see how it goes, though. Maybe there'll be some. I doubt it.
There he said, I doubt it, to the idea of any exemptions to those steel and aluminum tariffs, guys. So I would just flag again, this was a big point of contention with Canada and Mexico and other allies, including the EU, in the first term. It was one of the biggest moves that President Trump did on tariffs with allies in the first term. So I would expect a lot of retaliation next week on this front, especially because the countries that are going to be hit here, it's going to be a 25% tariff on all steel imports and 25% on all aluminum imports. So the folks who got carve-outs last time, it was mostly allies. That's mostly who will be hit this time around. So expect some retaliation, expect ongoing considerations here, and just, re-upping this contention, I would say, with Canada and Mexico right after striking a deal yesterday. Guys.
Megan, he was also asked about the impact of DOGE and federal workforce cuts on the jobs number and whether that's going to roll into the next couple of prints. What do you say about that?
He absolutely was. At first, he said that he thought it wasn't showing up in this report, that it would show up in the next couple of months. So I asked him then, I followed up to say, does that mean you expect some weakness in the following reports? And he showed some optimism. He said, yes, we'll see some DOGE impact on federal hiring. He does think that there will be some manufacturing hiring, especially because of the tariffs, that he says will offset that. We'll have to see if that pans out.
Megan, thank you. Megan Casella, obviously. Let's keep the focus on trade if we can. Joining us now is White House Senior Counsel for Trade and Manufacturing, Peter Navarro. Peter, good to have you this morning.
Good to be with you, David. Yes, sir.
Actually, I'd like to start with April 2nd because you've talked a lot about it. We had Secretary Lutnick on yesterday. We can talk about a lot of other things, but what are your expectations, given that date is not far away, between now and then, and what will actually happen when it comes to the reciprocal tariffs that you and the rest of the administration have been obviously talking a great deal about?
David, it's a certainty. Let's get rid of that uncertainty that reciprocal tariffs are coming. The notion here is very simple, that the rest of the world cheats us. They can have consistently higher tariffs and higher non-tariff barriers. That was something institutionalized many decades ago in the World Trade Organization with its most favored nation way of approaching tariffs. And we've been paying those bills all along. I would love just for a minute, though, because of what happened with the jobs report, to put all of this in some broader macro context, if I may. What we are in for the markets is a very healthy transition from Bidenomics, which was based on
Trump speaking in 15 minutes, guys. I don't know where he's speaking at, but apparently he's speaking in 15 minutes. The White House has not provided details about the topic of his remarks, but he's speaking. So we'll get some updates on whatever he's speaking about.
Keynesian overstimulus at the fiscal level accommodated by monetary policy at the Fed irresponsibly, coupled with two severe negative supply shocks in the form of higher oil prices and substantially higher regulations. And what that has let us inherit here now is both an inflation that was the worst since the 70s because of the fiscal overstimulus and the supply shocks, and a deflationary impulse in these higher regs and higher oil prices. What we're moving to very rapidly is quite the opposite, a proven Trumpnomics based on fiscal responsibility, monetary responsibility, but most importantly, positive supply shocks. We've already seen the price of oil come down significantly along with gasoline prices. So that's all to the good. The deregulation movement is moving apace. And as you know, David, what we get out of positive supply shocks is that virtuous thing where we get both growth and deflation. So this is the transition that's moving forward. The tariffs and the fair trade play into that by attracting investment, creating jobs here, and driving up real wages. And I think it's important when you saw the joint address the other night, one of the things that we should shine a bright light on it, Sarah was talking about investment and things like that. The president announced that expensing would be retroactive to January 1. So any restraints on investing over tax uncertainty. So we.
Oh my gosh, dude. It's the same people talking about tariffs every day. Their pontifications around trade policy. Like at the end of the day, no one actually knows what the administration's stance is on tariffs. And the reason I say that is because they think they have a sophisticated stance, but then every other day they replace their stance with something else outside of the fact that they like tariffs. But then when it's time to implement the tariffs, they never actually implement the tariffs. So I think all the theorizing about it by people on which direction it should go, it doesn't matter because in 10 hours, it could just change, which is what happened this morning when Trump said, I want to do more than 25% on Canada and Mexico. First of all, I don't think anyone should believe that, but the market kind of has to take his word for it at some point. And it's just, I don't know. It's just very, very flip-floppy back and forth. But again, I still also agree with Steve. Like in the face of being upset about this, you don't sell your retirement account. It's not November 2021. You get out because 2022 is on the way. At least that's, and maybe I'll be wrong, but that's just, it doesn't feel like that type of a market. It feels like a very volatile market that we are not used to because 2024 was volatile, but it kept being volatile to the upside versus volatile to the downside. Now we're getting the opposite. But that doesn't mean it's a bear market. It just means it's a volatile market that hopefully should end out green, even if it's not, plus 25% for the year. So we're going to see. We're going to see how this ends up playing out over the next coming months. I don't know what he's going to talk about at 11. I don't even know if we're going to get him live talking about something. Or if we're going to get the updates from the terminal, but I guess he's talking about something. Is anyone buying? Should we do some buying right now? Should we buy some stonks that are going to keep going down below? Oh my gosh, dude. My portfolio is down $29,113.84 today. It's just great to wake up every day and, be down a Tesla, essentially. Or be down a Corolla. This is not a Tesla. Tesla's like 45,000. What are you guys buying? What are we buying? I'm going to buy... All right, I'm going to do very small buys. I'm buying 5 shares of NVIDIA. Let's buy this freaking stupid semiconductor company. There you go. We did 5 shares of the vids of INS, aka NVIDIAs, and then we'll do 5 shares of hoodie. Very small buys, nothing crazy. Just something to nibble at here. Dude, and you know what? Screw it. I'm gonna buy 25 shares of SoFi at 12.11. Buy 25 shares of SoFi. All right, that's the buys. 25 SoFi, 5 hoodies, and 5 NVIDIAs. That's what we got for today. I think that's enough, given everything's about to tank even further. So I think we might as well just battery lows. Yeah, my battery's red to match the market, bro. The battery is red to match the market. All 3 of those are down like 10 cents from where I just bought them. See, like this is just this is just ridiculous, bro. It's literally ridiculous. I'm gonna have to buy some Grab here at 445. Dude, I'm buying 100 shares of Grab. Like below 450. I just whatever, dude. 446. Bought 100 shares of Grab. All right, that's it. I'm putting my phone away. That's it. Because all those are about to tank even further. That's it. Grab, hoodie, NVIDIA, and SoFi. NVIDIA, SoFi, Grab, and hoodie. Tesla 261. All right, hold on. We're getting some green candles. Are we? Oh, no, we are. Oh, we're actually getting some. Hold on. Oh, shit. Did I just get the bottom? Hold on. What happened? Did Trump said something? It had to be something Trump said. It had to be something Trump said. Hold on. I know it's a black screen. Let me fix it. What did they say? Hold on. Something. Those are across the board. Or was that just like the technical bounce? I don't think there's a headline. I don't see anything. Do you guys see anything? I don't see anything. Putin said he's ready to agree with Ukraine truce with conditions. There we go. Hold on. That's the headline. There it is. Putin says he's ready to agree to a Ukraine truce with conditions. Yeah, that should at least somewhat be good, right? That's like kind of decent for the markets. A little bit of peace. There's a green candle right there on the S&P. Got something, right? That's something. Let me see if we get some coverage on that. That is something. Maybe that's why, Joe. Okay, so I think Trump probably knew that Putin was going to say that today, which is why he put out that tweet about the sanctions, because he probably wanted to seem like the big guy before Putin concedes a little bit here, at least. Yeah, Putin said to be ready to agree to Ukraine truce with conditions. Boom. That is official, folks. That is official. Now, granted, it might not mean anything for a while. I mean, we need obviously a lot more specifics on what that means. But yeah, that'll definitely get markets to be a little happy right here. Wow. There it is. There it is. That's what we got. Kind of green. NVIDIA hold. I think I bought NVIDIA at what 110.50. NVIDIA's at 110.90. Got to 112 at one point. I don't know if it holds though, bro. All right, let me do a poll in the chat. Who thinks this holds at all? Who thinks that Russia news gets us green for the day? I would still say no, bro. I would still say no. I don't trust it. I don't trust it that easily. I think we're gonna have to see, but I do not trust it that easily. Yeah, there you go. That's the headline right there. So Trump's talking in 8 minutes. I have no idea what Trump's about to talk about. But I guess we're going to see very soon. 69% of you say no. Okay. So yeah, I agree with that as well. We're getting a little bounce though. A little bit of bounce. Very small bounce, but it's little. Robinhood, I bought it what? 42.50. It's 42.79. Very small bounce. Broadcom 184, holding on to its earnings pump a little bit. Gave up most of it. And then Nubank is green. About 1% on the day. What do you guys think he's going to talk about? What do you guys think he's going to actually say? I think it's going to be, I don't know, about tariffs or something like, or is he going to talk about what Russia just said? Maybe that's why the White House is not telling us the topic of what he's saying. The truce. Yeah, maybe the truce. Maybe that's what it is. I don't know. The whole gain is gone. Yeah, it's probably I think based on what Trump says right here, the markets will then decide if they want to continue to give this pump or not. Why does he talk every day? Okay, so here's a good question for the chat. Do you like that Trump is talking every day? Do you like the everyday press conference from Trump? My answer to this is yes. And the reason my answer to this is yes is because I still value transparency, even though what he says may hurt the markets, more than pretty much silence that we got in the Biden administration. I mean, like, I think you can count on one hand how many real press conferences Biden did where he actually took questions and where he was in a cognitive position to answer the questions, right? Like, you can disagree and you can hate whatever Trump says, but he can at least listen to the question and somewhat give a response. And he's doing it so much that I personally value that transparency more than anything. Granted, the headlines are crazy to follow, but I think it's better than not having someone who actually talks. 53% of you say no. All right, so 53% of you are a fan of not having him talk every day. Grumpy, I think for the $5 super chat, new DCA strategy, buy some before and after each Trump appearance, evens out the volatility. That's a great strategy. That's a great strategy. Yeah, I mean, look, some people hate it, some people like it. Remember, Trump's a media guy. Trump's been galvanizing attention his whole life, so he must love the publicity regardless. But that's his communication strategy. Now, granted, the reason a lot of people want to bring Joe Biden back, as they've joked, is because Biden didn't say anything. So the markets didn't have anything to react to because Biden didn't say anything. This one's a lot more different, but nonetheless, it's a question of, do you value the transparency or not? Let's hear from, I think this guy's from Goldman Sachs. I actually like this analyst. He's one of the better macro people. Let's get his take, and then we'll keep going from there.
The impact isn't going to be that large. We estimate only about 1 to 2 percentage points in terms of the average US tariff rate. But of course, many foreign countries, Europe in particular, have much higher sales tax rates and VATs. If you view that as a tariff equivalent, then you're going to get a much bigger impact. Now,
well, they do.
don't they?
They do.
Well, yes. So if it's really 1 for 1, if they haven't been totally clear about the formula, if it's really 1 for 1, and you take 1 percentage point of VAT as 1 percentage point tariff equivalent, then we're talking a much bigger increase, more like 10 percentage points or so. I think in the end, we'll see. Of course, there are announcements, there are threats, and then there's the ultimate number at which they land, which may be somewhere more in the middle.
Do you buy their economic argument that all of this is going to lead to more investment, manufacturing, and jobs in places like Akron, which I know very well, because of what they're doing on trade? Do you buy that? Is it going to work?
I mean, over the longer term, I think it can certainly have some effects. I tend to focus on the more near-term impact, and the more near-term impact is that if you increase tariffs, there is going to be some impact on prices. The PCE price level, by our estimates, rises by about 10 basis points for each 1 percentage point in the average tariff rate. And then there are some growth effects as well. So in the near term, it's going to have, lower growth, higher inflation impact.
What type of growth hit are we talking about, or is it just too uncertain to tell from this point?
Again, it depends on how much you end up doing. If, for example, you had a 10 percentage point increase in the average tariff rate across all U.S. trading partners, I mean, our estimate is that's about 100 basis points on core PCE on the price side. And then on growth, somewhere between 0.5 point and 1 point. That really does depend a lot on maybe more psychological factors like the uncertainty that's being created, how much of an impact that has on business investment, in addition to the sort of fiscal tightening effect of this. There's also the question of, what happens with the tariff revenue? You get additional revenue. That's, of course, a fiscal tightening, negative near-term growth effect. But then if you recycle that additional revenue into tax cuts, then you blunt that impact. So I'd say on prices.
That's a good point. His argument here is like, hey, the tariff revenue is good, but if we have tax cuts and we balance out the revenue we're getting because we're not collecting as much revenue from taxes, there is no additional revenue. And that's a hell of a point. I mean, if we're going to pass the trillions of dollars of tax cuts that Trump wants, will the tariffs actually recompensate for all those losses?
We have estimates that are probably more reliable than on the growth side, but it's not going to help growth.
That you haven't made any changes really to your at least your Q1 tracker, right?
Q1 tracker is 1.6%.
You've been pretty steady.
We took it down after last week's data, or the week before rather, but not by as much as some of the other trackers like the Atlanta Fed's GDP Now, which we think shows an exaggerated amount of weakness because a lot of the big increase in imports was gold, which isn't going to show up in the GDP numbers.
Right. Is the jobs number reflecting any of this government efficiency push yet?
Well, there was a 10,000 decline in federal employment. So with the exception of that, which is a relatively small contributor, I don't think so. And I think more broadly, the jobs report was, a touch weaker across a range of different components. But overall, I don't think there was really much that we learned here.
Is household too volatile to really watch?
I think so. Yeah, I think the household survey is too volatile. I mean, the household survey was a bit weaker. The unemployment rate was a bit higher. U6 rose. So I'm not saying it was a strong survey, but I certainly wouldn't take the month-to-month change in household employment as a reliable indicator. And then on the payroll side, again, a touch weaker, but not dramatically.
Right. We mentioned work week earlier. Explain to viewers how that mental calculus works. If you are trimming work hours, is that a precursor to cutting, or is it a cushion to where you might eventually be able to add hours back?
Well, it could be either of those two things. I think statistically, if you just look over many cycles, you would say the work week often moves a little bit ahead of the actual employment numbers, so it can be a bit more of a leading indicator. Again, the moves that we've been seeing are not large enough for me to say that this is the precursor to anything. There are some real risks to the economy, which we've been discussing. They're mostly policy related. I don't think there's much in the current, labor market picture that would make me worried. There was maybe a hint of worry in the jobless claims numbers a week ago, but it came back down and it turned out to be, if it wasn't an alarm at all, at least a false alarm.
You getting questions from clients about stagflation?
I mean, sometimes.
Is the risk rising?
I don't know how stagflation is defined exactly, but if you have
stickier, higher inflation.
Well, if you directionally, if you have higher inflation and lower growth, then it's a stagflationary direction. But I wouldn't call it stagflation. The economy is still growing at close to 2%, and inflation, while above 2%, it's not that far above 2%. Now, could you tell a story where things continue in that direction? You could, but I wouldn't at this point.
One more question, which is, we are seeing signs of weakness pop up, in certain economic spots. We see it in the bond market being reflected. And I think it's presumed that tariffs are the main risk right now, right? And we're moving around on those headlines. But what about monetary policy? I mean, could some of the underlying weakness that's showing up now have to do with the fact that we are still at high interest rates and they are restricting the economy? I mean, housing's been a particular mess lately.
I think, look, the funds rate is still above most people's estimates of neutral. So all else equal, of course, if you were 75 basis points or 100 basis points lower, that would provide a boost. One thing I would say, though, until the recent weakness in the equity market, if anything, financial conditions were significantly easier than a neutral reading. And I tend to look more at the level of financial conditions. That's obviously changed to some degree. We've seen some tightening in financial conditions, but we're definitely not in an environment where financial conditions overall are tight at this point. So I don't think that there's a strong signal from what you're seeing in the interest rate environment and in the in the financial conditions environment that the Fed, needs to bring the funds rate down soon. So I don't expect them to do anything very soon.
Okay, Jan. Thank you very much for joining us.
All right, thank you.
On a more lively jobs day than normal with all this tariff news. Thank you.
We are watching this report from Punchbowl talking.
All right, Trump is not live yet. People are saying he's going to talk about Iran. Some other reports I'm seeing are that he's going to talk about the jobs data. I think it's about jobs. I don't think it's going to be about Iran. It looks like it's going to be about the jobs data. So I think it's going to be from the Oval Office too. I don't think it's the like stadium in the press room. And I'm pretty sure from what I'm looking at, it's going to be about the jobs data based on non-farm payrolls today. So we're going to see. If he takes questions, obviously, then it will be about a lot more stuff. Wow, Reddit's down 10%. Oh boy. That one is, yeah, that one is getting hit. Reddit, again, I got rid of Reddit a couple days ago for NVIDIA. Wow. All right. Yeah, that was a good move. Well, NVIDIA went down too, so it's not like I was saved from it, but yeah. Well, this one was more obvious that it needed to collapse. I mean, Reddit was just stupid. NVIDIA is actually cheap. Reddit was hyped up aggressively. Covered call premiums were great. That's why I got into it. Got some good premiums, got out of it. But yeah, this is one of those names that probably needed to take a breather, down 8.7%. It IPO'd at $34, so still up a lot from where it IPO'd at. This is a good question. Which one would you rather buy now? Google, Amazon, or Microsoft? Google, Amazon, or Microsoft? My immediate answer would be Google, but Amazon below 200. It makes you think. If Amazon was like 215, I would definitely say Google, but Amazon below 197, maybe coming up below 195, makes you think. Let's do a poll on that one. No one's picking Microsoft, dude. Goodness, Satya, what have you done? Which dip do you buy? Google, Amazon, Microsoft. I think, gun to my head, I'd probably do Google. Even though Amazon's up there, dude, it's close. I just think Google's cheap enough to get a bit of a rebound closer to 200 once the market turns around. If the market ever turns around. Or if we're stuck in a state of limbo forever in the stock market. Wow, 59% of you picked Amazon. Okay. Amazon is what most people are going with. I don't think Meta, if I added Meta, I don't know if that changes the answer. Meta, I mean, like, yeah, but Meta's not really. Meta's cheap, but it's not cheap. Below like 550. Okay, now you have a real argument for Meta. But now the argument against Google, by the way, a report came out the other day by Google. Trump's still not live yet. I'll switch once he goes live. There was a report that came out by Google, and they said they're now doing 5 trillion searches annually. In 1999, that was about 10 billion. So everyone who says, well, search is dying, it's like, it's not really dead. 5 trillion is a lot of searches. It's more than any other search engine on the planet. And so, yeah, I get the Meta narrative in advertising is better than the Google search advertising narrative that people are arguing will be commoditized by LLMs, but still, people use Google. Granted, I am using Grok 3 a lot more. There's the numbers right here. So 5 trillion they're doing in 2025. They did $1 billion in 1999. I mean, it's not exactly like search is dead right here. Where's Hood? Is Hood crashing? Are we below 42? No, we're still above 43. All right. So we're still above 43, but we are down 4%. Look, again, the thing about Hood is all these good updates we're seeing about them with the stock price going down just means that the PE ratio collapses and it gets cheaper and cheaper and cheaper. And again, if you're in this long term, you want to get cheap shares, right? You don't want to get shares at 65. You want to get them at 43 with the understanding that it could fall much more below 43 if things really hit the fan and the S&P meaningfully loses its 200-day moving average, which it already did today. Now at 572 is the average. We're at 570. We were at 568 at one point. But long term, obviously, I think it's a winner. And then S&P inclusions today, I don't think we're getting in, but that maybe could be an upside surprise. I also don't know if that pump is going to last if we do get in, because Robinhood already has a ton of institutional holders. But it would just be good in general for the company long term to get into the index. Okay, Trump is still not live yet. It's 11:08. They said 11 a.m. Oh, wow. Trump's going to be speaking at the White House Digital Asset Summit as well today at 3 p.m. Huh. At 3 p.m., Trump's going to be speaking at the White House crypto thing with Vlad and Brian Armstrong and all those guys. So he'll be speaking twice today. And the one we're going to get soon is the Oval Office one, which should be happening in probably the next 10 minutes. Yeah, it's about jobs data. Yeah, that's correct. It'll be about jobs data. NVIDIA giving back their gains. NVIDIA is about to give back its gains, 110.83. What a wild couple months in the markets, bro. What a wild couple months in this market. I feel like I don't know. I feel like people thought that it would just be a little bit more bullish for the first couple months, even though technically after such a good year, like it's not supposed to just keep going up in a straight line, right? Like, but still, everyone was like, well, it's gonna be bullish. And it's like, nope. It's bullish long term, not bullish short term. And I don't think anyone expected the massive amount of tariff volatility to this extent. I mean, I think people expected some volatility, but this is like every other hour. It's new stuff. And I guess we just got to get used to it. Matt Money, what's up, brother? Is Palantir still holding green? Palantir holding green is pretty impressive right here, up 2.27%. So Sham just said something today as well on Palantir. Let me pull up his tweet. Sham said that Warp Speed, which is their new manufacturing operating system, has passed 100 million. Wow. In total contract value in the month of February. Look at that. That one's growing very nicely. The primes might be plotting in their adoption, but the new entrants went straight up to Warp 10. Warp Speed now surpassed $100 million in total contract value in the single month of February. Looks like they're closing these deals. I mean, they announced a bunch of different deals over the past couple of weeks or the past couple of days. So it's nice to see a little bit more updates on the deals that they're getting. A lot of these international. It's just crazy because, again, they haven't talked too much since earnings. Obviously, the stock did really well on earnings, but now we're back to where we were before. So next earnings on Palantir is going to be an interesting one, dude, because like theoretically, I think they're going to crush earnings. I really do. I don't think there's nothing like same thing with Hood, right? I think they're just absolutely going to demolish earnings. But I don't know if the market gives us that multiple again that we had when we were trading at 100 times price of sales. Like if they're going to report in what, May? If this tariff volatility stuff doesn't end by May, which it's probably not, and even if it does, it's not like we're going to go full on risk on bull market. I mean, maybe we do, but if we don't, do we easily get a 30% pump after earnings like we got in February? Because if not, then, that's probably, I mean, we're probably going to have to wait. We are probably going to have to wait until Palantir really shows us more and more growth to be able to get to those elevated multiples, which again are objectively incredibly elevated. Like it's not easy to be trading at 100 times price of sales. Is SoFi below 12? But if we at least hold these levels on Palantir, I think that's important. SoFi still not below 12 yet. I think I bought at 12.25, 12.19 right here, down about 2.13%. Let's try to not be in a bear market first. Yeah, that's the point I'm trying to make. Let's try to not be in a bear market before we think the multiple can get expanded that aggressively again after earnings. Even after it's like, Palantir 35% growth, they can come up with some big numbers. It's just, is the market environment going to be ready to expand that multiple that easily? And given what we're seeing, it's probably not as easy right now for that to happen. Okay, cool. So we're still waiting for Trump. He should be live in a second or probably in a few minutes. And we're going to see what else he's saying there. Let's hear from another analyst on how they're thinking about this volatility in the markets. And then we'll keep going from there. Is Crowd a good buy right now? I like CrowdStrike. It's my favorite cybersecurity name. However, very expensive as well. It's more expensive on a price earnings basis than Palantir. So like if you buy it, you got to know you're buying something expensive in a volatile market where expensiveness might not get a premium that it's gotten over the past 5 months.
With Sarah Malik, who is Chief Investment Officer and Head of Equities and Fixed Income at Nuveen. Sarah, I take it that you were listening to what the Treasury Secretary had to say. What do you think coming out of that interview?
Well, markets are skeptical that the use of tariffs to rebalance global trade won't lead to either a growth scare or a reacceleration of inflation. And that's why you've seen the S&P 500 gains since the election get completely wiped out, and also international markets are outperforming the U.S. markets year to date. I think the catalyst that we need to see for the S&P to find solid footing is either clearer signs that economic data is strengthening, and that will either come from the consumer or employment markets. Now, from the consumer, we've seen retail sales miss. We've seen companies talking about how the consumer is pulling back. And then looking at employment markets after January's number, which was fairly weak versus the prior months, and also the fact that half of payroll creation since 2019 has been government driven, I'm concerned today's payroll number will be closer to 100,000 rather than 200,000, and that we're going to see continued signs that the employment market is weakening. So I think this trend of the U.S. remaining defensive and European and Asian markets outperforming the U.S. is likely to continue for the time being until we get that economic clarity.
So you don't sound like you're a buyer right now of U.S. equities.
I think it's tough for U.S. equities because of the economic data that we're seeing and the fears over inflation. Now, I get the argument that deregulation and tax cuts could lead to offsetting any issues we see because of tariffs, but those are further out right now. We don't have clarity on those. And then, of course, there is this question about the Fed. Usually when tariffs come into place, you do see a one-time bump in inflation. Will the Fed look at that as transitory, or will the Fed react to that is unclear. So all of that uncertainty in the U.S. and the fact that we came into this year with the S&P 500 at about a 20% premium to history makes it tough. And let's not forget one more thing, which is the technology sector. 30% of the S&P 500 weighting, tech stocks have suffered, and that also is leading to the U.S. suffering versus the rest of the world.
Yeah.
All right, let's get another analyst as well that believes that the Trump tariff stuff will actually be really good. This is the White House National Economic Council director. Here's his defense of these Trump policies.
Welcome to the program, sir. It's always great to get your thoughts. I just want to take a beat and take a big step back and just think about where we are and the moment we're in. This is what we've heard from the administration over the past few days. The president has said there will be a little short-term interruption. The Treasury Secretary, Scott Bessent, spoke this morning and said there's going to be a detox period. You said last month the jobs market was worse than markets thought. What exactly are you, together with other officials and the president, this administration, what are you preparing us for?
Oh, we're preparing you for news like today, the great jobs report. I think one of the things that you see, if you look at it, is exactly the objectives of the Trump administration, and the fact that even though we got a lot of work to do, we got to pass the tax cuts and get this deregulation train rolling, is that we're going to be reducing government employment and reducing government spending and increasing manufacturing employment. And as you can see in the jobs report today, you're already seeing a pivot in that direction. That's a huge one. And so last year, 111,000 manufacturing jobs were destroyed by the Biden administration's policies. And in this month alone, in February, we got 10,000 manufacturing jobs and 9,000 auto jobs. And as you know, those auto jobs are, here, they're going to be paid well, and they're here for a good long time. And that's really just sort of a down payment on the Trump policies that are going to skyrocket into a golden age as soon as we get the tax cuts passed.
So, Kevin, I hope you're right. But what I've heard over the last week or so regarding the economic data, when I spoke to the Commerce Secretary, Howard Lutnick, Secretary Lutnick said that this was Biden data over the last month, that this was not Trump data. So if it's good, is it Trump data? And if it's bad, is it Biden data? How does this work?
Let's go into the specifics. So what specifically has happened is President Trump has made a big effort, along with Elon Musk, to find workers that are unproductive and to get them off the payrolls. And so we see government spending going down. So is that a Trump effect? Yes. Manufacturing and job creation in the auto sector is happening because people are anxious about future tariffs and they're already onshoring production. Is that a Trump effect? Yes. But it's true that we've inherited a lot of terrible Biden policies. They want to, get expensing gone and so on, and that's bad for capital formation. We're going to fix that. So we haven't fixed everything, but already the things that we're fixing, you can see in the data, and I think it's really quite remarkable.
Well, let's talk about the manufacturing data as well. We had that over the past few weeks. You're familiar with ISM manufacturing. You're familiar, I'm sure, with the respondents in the surveys, and this is what they had to say. The uncertainty about tariffs keeps us cautious on spending. Customers are pausing on new orders as a result of uncertainty regarding tariffs. The incoming tariffs are causing our products to increase in price. Are you hearing the same message from businesses? Are you hearing something different?
What I'm hearing is a massive amount of onshoring. We've got more than $1.5 trillion in commitments for new factories, and you're already seeing it in the auto data. I mean, think about it, how hard it is to create a job in the auto sector. To have 10,000 in a month means that the attempt to onshore activity, to make it so that the jobs are created here and the money isn't just frittered away to foreign countries, is exactly what President Trump's objective is, and it's right there in the data. Now I know that it's 1 month and the data can blip around, but I was really, really stunned. And the other thing I was stunned about, which I know you guys follow this a lot. In fact, Anna Wong at Bloomberg is one of the best young economists I know at looking at the numbers, is that it was a really bad flu season. And so when I adjusted for the flu, what I thought this number was going to be, it was way below the number that we got. And so I was very positively surprised by this number once you adjust for flu. And then you see that all these jobs that are created in manufacturing. And finally, if you go back and look at the Biden job record, mindful of the fact that they revised it down 1 million jobs last year, don't forget that a lot of the job creation was government workers. It was government workers. About a quarter of the job creation over the last 2 years was an increase in government workers. And so if you take those out and then still have a strong jobs number, that's a great economic outcome.
I'm pleased you're in a good mood, because that's refreshing. Because I have to tell you, over the past week or so, Wall Street is full of a lot of gloom right now, Kevin. I'm sure you've heard some of it. So here's some of it for our audience and not just for you. Barclays say US recession no longer unthinkable. Morgan Stanley this morning downgraded growth forecasts, upgraded the inflation outlook. And this is the why. This came from Deutsche Bank. Another talented economist, Matt Lazzetti. Considerable downside risk to the growth outlook are mounting. Trade policy uncertainty has hit historical levels. Financial conditions are tighter. Sentiment indicators signal weaker growth, and more trade actions are likely to come. Kevin, the people that we've been speaking to want clarity on trade. They want to understand that maybe in a month or so, this will be done. Whether the tariffs is 10, 15, 20, 25. When can they expect that much needed clarity?
Oh, absolutely. I think in some sense that you've got quite a bit of clarity already. There's no uncertainty. There's going to be some tariff. It's going to be reciprocal. If you don't like tariffs very much, then reciprocal could be a great thing for you, because then countries around the world will be lowering their tariffs. But the president believes that if we replace income tax revenue with tariff revenue, it can make everybody better off. And so if we take $1 away if you buy a foreign good and then give you $1 back at an income tax, you're going to be better off, is what he believes. And I think what's going to happen is that markets are going to watch numbers like the numbers we see today, and they're going to gradually see that President Trump is right. This is how you build a golden age.
All these companies are going to be worried about what's still to come, and will hold off on making these decisions because they don't know what policy actually is.
NVIDIA just went red again. Trump is not live yet.
A month from now, we'll get more detail on tariffs on the likes of the Europeans. We'll also get an update on what's going to happen with Mexico and Canada. Kevin, can you share with us whether the president has provided any metrics to the Canadians, to the Mexicans, on what they need to get done between now and next month?
I can tell you that we've been in the Situation Room looking at the very best info we could get from our intel agencies on the progress that's being made on the drug war. And that's what this whole Canada-Mexico thing is about. It's about a drug war. And there have been some parameters that have moved because it's an active negotiation. And President Trump is seeing progress of the drug war, both in Canada and in Mexico. And he's, in the end, trying to save the tens of thousands of American lives with this drug war. And that's why he's adjusted when he's seen progress. But yeah, we've got people, satellites and everything, looking at where the fentanyl labs are. And we're making progress. And I think that that's separate from what we're going to see in April, where uncertainty will be resolved because we'll have a report on the Reciprocal Trade Act.
The European issue is different. You've been clear about that, and I think we all understand it. There's been a big change this week over in Europe, and potentially in the months and years to come. The Germans are getting ready to spend on infrastructure and on defense. Do you and the administration like what you're hearing from the Europeans in the past few days? And do you think that would lead to a different approach when it comes to tariffs in the next few months?
Right. Absolutely. The Europeans need to make a lot of progress on defense. That they've been free riding on America for a long, long time. But they're our friends. That's a foreign policy issue. But on an economic policy issue, think about it this way, that in a typical month, we're importing about $35 billion worth of autos and exporting about $13 billion worth of autos. And that's because of all of the non-tariff barriers and tariffs themselves, like the Europeans have a 10% tariff on autos, that President Trump's views as unfair. And so against that backdrop, the idea that we created almost 10,000 auto jobs this month shows that he's on the case, and he's fixing these things that are unfair for American workers, and he's making progress already in February.
Kevin, do you think the reciprocal tariffs, the focus of them will be on autos, or is it much broader than that?
Oh, it'd be much broader than that, yeah. We basically want trade to be fair for Americans across.
Basically, yeah, we're going to have tariffs on everything, not just autos. It is going to be much broader than just that.
Everything, across everything.
Kevin, as you know, there's been some jitters on Wall Street. So let's finish there. In the equity market, we've seen a pullback of 5-6 percentage points. Not too dramatic, but there's certainly some fear out there. And you see that in sentiment indicators. Traditionally, with the Trump administration, particularly in the first term, we became accustomed to what became known as the Trump put in the equity market. Secretary Bessent says there isn't one anymore. He says it's all about the upside and there's a big call. I understand that. But the president said just yesterday, I'm not even looking at the stock market. Kevin, what is the president looking at? And if I can leave the interview here just with this final question, what is his metric for success through this year? What's that number one data point that we should be judging this administration by?
Well, I think that obviously when you're looking at the economy, there are lots and lots of different things that we care a heck of a lot about. For the drug war, the thing we care about is reduction in deaths of fentanyl. In the economy, what we want to do is see a creation of manufacturing jobs, especially auto jobs. And we want to see a successful tax bill. And I think that all of that is going to give us the 3 or 4% growth that we're all hoping for, that we got in the first term and that we'll get again. But I think that just picking one metric is not enough for the president. But I can tell you that last night when I was in the Oval late at night talking about the jobs numbers with him and telling him about the 10,000 manufacturing jobs and 9,000 auto worker jobs, he was really, really pleased to see the numbers.
So I think that's why Trump's going to do this press conference. He's going to talk about, I think he has two narratives that Trump wants to get into right now. Number one is the non-farm payrolls this morning. So he wants to take credit for the first real jobs report of his administration. This is the first one he's getting in his second term. And number two is try to change the narrative around tariffs taking away jobs or tariffs causing volatility. Because his argument is, well, if we're getting more jobs because of the tariffs, because we're having more onshoring in the United States, then that's a good thing. Granted, in that interview, it was very similar to Howard Lutnick yesterday, right? It's like answers that are not as believable as you would want them to be, and sort of half-baked metrics of analysis to give you a determining factor that the administration actually understands what they're doing with the tariff policy. Granted, look, we're a month into it. I mean, definitely you got to give them some more time to play this out. It's just, I think rightfully so, people think the flip-flopping has been tough to deal with. Palantir is 5 cents away from going red. It was the last one to fall. Everything else was green, or everything else was red on the day besides Celsius for some reason. Palantir is looking like it's going red. Yep, there you go. Palantir's red. SoFi is 12 on the dot. 11.99. Let's see if we get there. It's 1 cent away. There you go. Below 12 on SoFi. Where's Hoodie? Nubank's at 10.44. Nvidia's at 109. Hoodie 42. We bought at 42.50. It is about to go below 42. Thankfully, it was only 5 shares, but yeah, this one's getting hit. and then Trump's about to talk. So, I mean, who knows if that's going to help anything. Oh my gosh, bro. Holy crap. This is wild, dude. What is everyone doing? Is everyone actually working from home on Friday? Or are you guys just staring at the red on your screen? Remember 3 weeks ago we did this? And I was like, yeah, no one's working from home. Everyone's staring at Palantir at 125. Now everyone's staring at their screen, but it's obviously not for the right reason. Both. Someone said work? What do you mean work? Oh my gosh. This is wild, bro. This is wild. Trump should be live pretty soon, and we'll see what he has to say. Oh boy, oh boy, oh boy. Michelle says my mom's doing her home stretches for her knee. I love that. Chris's 3-day work week. I'm chilling with you. Who's okay? So who's across the world right now? Who's in Europe and Asia watching this? Because like if you're in London right now, time in London, it's 4 p.m. Dude, it's always so weird for the people that watch this internationally. Because like for me, it's the morning, right? Like my zone is like, all right, market's opening, let's get everything together. But for you guys, you're probably coming home from work, or I don't know, like having your afternoon your tea or something, or you're having dinner. Like it's always a different time for you to track US markets. Dude, we have so many Europeans, bro. This is why I have to visit Europe. We have so many of you guys here. We got Scotland, we got Portugal, we got Madrid, we got Sweden, got Michael from Belgium, Slovakia, Sweden, Germany, Portugal. We have so many. It's so cool. It's so freaking cool around the world. So many people from different places. We got a bunch of South Koreas in the house. We got Argentina. I love it. Germany, Denmark, Ireland. You know, I really want to go to Ireland one day. I really want to go to Ireland. And there is one reason for why I want to go to Ireland. It's a simple reason. It's a simple reason. But the reason that I want to go to Ireland, the reason, everyone's like, don't do it. Don't do it. The reason I want to go to Ireland is because I want to get my money to start Dublin, baby. All right, that should wake everybody up. That should wake everybody up. Hopefully that put a smile on everyone's face after all this damn red that we're looking at. Robin is about to go below 42. There she goes, below 42, 41.99, down 7% on the day. S&P down 1%, 567. Oh my. Oh my, oh my, oh my. No, but actually, dude, I need to go to Ireland. I like legit, like, I need to be in Dublin and I need to record myself making this joke. I've made it way too many times on this show to not do that joke in person. For all the new people here, you heard it for the first time. So, but a lot of the OGs were like, no, we know what he's going to say. I need some more jokes about different countries. Because the Dublin one, you know, that's not even, dude, I can't even lie about this. That's not even my joke. I got it from a lyric that Drake had in one of his songs. He was like, what's the song? Drake, Lil Wayne, freaking, dude, what's the name of the song? It was in 2020. Oh, you guys might know what I'm talking about. What's the freaking song? He said something. I got to get the lyric. Hold on. Let me just type in Drake, Money, Dublin, Ireland lyric. Oh, I got it. Wow, Google was good. Shout out. See, I don't go to Grok for this type of stuff. I go to Google. For this. I'm gonna pull it up. Yeah, it's not even my joke, bro. I got it from a rap lyric, and that's how we got here. So, yes, I stole it, bro. Trump's still not live yet. S&P is announced at 5 p.m. today. 5 p.m. today. 5:15 to be exact. Okay, so Drake said, money just keep coming in. You would think I'm Irish the way that it stays Dublin. Tell me that's not a fire lyric, bro. Money just keeps coming in. You would think I'm Irish the way it stays Dublin. I'm going to steal that, dude. I got to steal that. Money just keeps coming in. You would think I'm Irish the way it stays Dublin. All right. Why are you guys saying ass? That's a good line. That's not an ass line. It's a good line. That's not a bad line at all. Meet up in Ireland. Yeah, we got to do a meetup in Ireland, bro. We got to meet up in a pub. Ireland is known for drinking, right? Drinking is like what the Irish are known for. So like, I need to get wasted in Ireland one day. That's got to happen. Cannot die without that not happening. We got to drink in Ireland. Yeah, let's do word of the day while we're waiting for Trump. Let's do word of the day. You know, Powell speaks at 12:30. So, I mean, like, I guess we're going to go from Trump to Powell immediately, and this stream's going to go to like 1 o'clock or something. Like, because we got to listen to Powell, right? Like, we got to see what he says. So, wow, you guys really hated that line, bro. I liked it. I thought it was good. I mean, when do you think we're going to bottom? I have no idea. We talked about a bunch of metrics this morning for why we're theoretically getting close to the bottom, but I mean, are we bottoming? I have no idea. I have no idea. Word of the day is tapiri. No, that's going to be wrong. So before I press it, let me readjust myself. Word of the day is topiary. But then the I, okay, how do we say this?
Topiary.
Okay, I was, see, like that's this. I was like, in what world do you think topiary? Like, no, it's just, it's either it's me or everyone agrees with me that these words are unable to, like, it's just not, you're not unable to like meaningfully say them, or it's just me that looks at a word and comes up with the weirdest pronunciation. Like, did anyone think it was
Topiary?
Did anyone think it was topiary? I see a T-O-P, I think top immediately, especially with what's going on in this market. Like, I think topiary or something. Topiary? If you practice topiary in your yard, you'll end up with shrubs and hedges in the shapes of unicorns, lions, and giant prairie dogs, since topiary means cutting bushes into fun shapes. This word is pointless, bro. This word is so stupid. The word is pointless, and the pronunciation is also ridiculous. We've been getting a lot of pointless words every day, bro. It's you guys thought it was topiary? Like, if it had two E's on the P, then yeah, I would say it's topiary as well. This is a common word. Oh my gosh. It's not a common word in my opinion. I've never heard of topiary. I've never heard of freaking topiary. Like, you guys are lying if you said you heard of topiary before. Like, who's legitimately, yeah, I'm gonna go do some topiary in the backyard. Like, no one said that before. Learned it in 4th grade. All right, but do you guys know what the word Byzantine means? I bet a lot of people haven't heard that. That's my word, Byzantine. That's my freaking word. And mate, you need to do landscaping. Dude, I'm not gonna lie, bro. I hate having to do anything that requires like actually physically building shit. Like, I just hate it. I like, if you ask me to put a tent together, like a tent up in like if we were camping, I really wouldn't want to do it. Like, I would be forced. Like, I'd rather someone else do that and then me live in the tent. I wouldn't want to live in the tent either. Quite frankly, I wouldn't want to go camping. Okay, why do we need to go camping? Why do we need to go live with the bears? Like, we have enough bears in the stock market. I'd rather be in a nice room with an air conditioner and Wi-Fi. That's it. That's all I need in life. I don't need the tropical rainforest. I don't need the Amazon rainforest. I need more Amazon stock. I'm on a roll today, bro. Holy crap, dude. I'm on a roll. But I need the internet. That's it. That's all I need. Could you imagine me pitching a tent, bro? Making a tent? Like, like I hate this shit, bro. Like, I'm just like, I don't like it. It's not, I don't get excited for the challenge of like putting together the table and like looking at the directions. I'm like, no, I'd rather pay someone to do it, bro. I'm not, that doesn't make me excited. It doesn't. It does not make me excited. I hope my wife doesn't want a guy who can like build shit. I'm gonna straight up tell her, I'm like, no, we'll find someone who could set up the vacuum, but I'm not like, I'm probably not the guy, you know? I don't know if I'm the guy to do that. I don't know if I am. I could talk to her about the philosophical nature of existentialism. We could have that discussion, you know, that's maybe it's a little bit more valuable than freaking the vacuum, but I don't know if I'm the guy to make the vacuum. All right, where the hell is Trump, bro? Why is this guy waiting forever? Just say what he's going to say and tank the markets. Like, let's get it over with at this point. Where freaking is he, bro? Mitt does his nails, not hammering the nails. Yes, exactly. Exactly. That is, that's how it plays out. Oh my gosh. Oh my gosh. And then we got J-Powell later today. So we got Trump and J-Powell back to back. Trump and J-Powell back to back. And then we had this Putin news this morning as well. It's a lot of shit, bro. It's a lot of shit. Magusto, thank you for the $5 super chat. You need some green energy for your soul and body. I appreciate you, brother. Thank you for that super chat. Ray, thank you for the super chat as well. You can go camping and live with the bulls. Dude, did I ever tell you guys the story? I went camping when I was this was 2012, so I was 15. I went with my friend's parents because they're like really outdoorsy, and it was me, him, who was my age, who was 15, and then his little brother was like, I think 7 years old, and then his two parents. And we set up the tent and everything. We, quote unquote, I was part of it. I like, you know, I gave them the screwdrivers and stuff. But then when the tent was set up and I slept in the tent, I sleepwalked. I woke up, I opened the tent, and I got out of it. And then his mom came running after me in the forest, and like she got me back to sleep. And then I woke up the next morning and she told me, and she was like, you know, you sleptwalked last night. I was like, what are you talking about? She's like, you woke up, you opened the tent, and you started walking in the forest. And I was like, what? I was like, I did that? She's like, yeah, you did that. And it was just like, I don't know, I guess in that environment. Like, has anyone done that? Has anyone sleptwalked? Has anyone legit like got out of bed in a state of like unconscious consciousness, and then you go do the like you go do something that's like probably kind of stupid, but you still do it, which is sleepwalking in this situation? Because that's what I did. And I couldn't believe it. And so I think that kind of told me, like, I'm not meant to be outdoors, bro. That's just not it. I was possessed. Yeah, and I was not drunk, bro. I was 15 years. I wasn't drunk, but or maybe I was possessed. As a child, I fell down the stairs. My brother used to do that. There's this thing called lucid dreaming as well. I've never done that. I think I have done that, but not as intensely as some people. NVIDIA is about to go below 109. Oh my God, it's below 109. I wish this was a dream, but it's not. NVIDIA below 109. But lucid dreaming is crazy because it's like you controlling your dreams and like having some level of understanding of what's going on. It's like some crazy shit. People who do psychedelics also have experience with that stuff. I've never done a psychedelic. I'm too scared. I'm too scared of a psychedelic. Wow, NVIDIA 108.9. My goodness. Amazon is $3 away from 190. Tessie's 250. Robin, just take it below 40, bro. Just do it. Just do it. Give us below 40 at this point, because that's what's happening. Nike's red. AppLovin has to be down a lot. Where's AppLovin? AppLovin's one of the high flyers. AppLovin, that's down 2%. Okay, that's down about 20% for the week, but that's down 2% of the day. Palantir is down 0.5%. NVIDIA, 108.9. DraftKings down 7%. Elf Beauty is up somehow. Why is Elf Beauty and Celsius up? What is this market, bro? What is going on? Who the hell is buying makeup and energy drinks over freaking chips? Like what is going on here? Like, or Robinhood. Like, Robinhood's growing way faster than Elf and Celsius. Like, where is this? What is the market doing? Elf is not a safe play. You could say it's a value play because of how much it's fallen. But if you read their earnings and you know their China exposure, it is not a safe play. And Celsius is just like, it's energy drinks. Like, I don't like, they're about to spend $2 billion on an acquisition. Like, how is that some exciting company to get into? Unless Elf is benefiting from the makeup recession, which is this theory that women buy more makeup during a recession and the market's thinking, all right, we're about it. Wait, is Ulta green? If Ulta's green, maybe that's the theory. Ulta's flat. Elf up 3% seems like it's an Elf specific thing. Maybe that's the argument. Funds are rotating to consumer staples. Yeah, that could explain it as well. Let me get a heat map on the day and see what things are looking like as well. Where do we have the green? Wait, is Apple green? Hold on. Apple's green? My goodness, Apple's freaking green. They're buying Apple. They're actually buying Apple. So everything's red, as you can see right here on the screen, except Apple. Pharmaceuticals, besides Eli Lilly, are doing okay. Retailers getting smacked. Tech getting smacked. Utilities are green. Energy is green. And then communications are green. Industrials are kind of mixed. Finance getting hit. Semis getting hit. Tech getting hit. Retailers getting hit. And then, yeah, consumer staples and non-durables, those are green. So those are technically, I guess, where the money is rotating to just a little bit right here on the consumer non-durables. For the year-to-date, this is the year-to-date. This is what we got year-to-date. Again, a lot of red against tech and green in finance and pharmaceuticals and other areas. Tom Lee did say this week would be the bottom, potentially. Wait, did Elf just announce a Taylor Swift partnership, actually? Are you trolling or is that real? I feel like you're trolling. Is that real? Yeah, you're definitely trolling. That's not real. I mean, that could explain it. 3% from Taylor Swift. That would explain it. Rheinmetall is also down 7%. Okay, so everything's getting hit. Yo, is Rigetti still green? Is Rigetti actually still green in all of this? Oh my God, Rigetti's up 6%. How is this? What is going on? Celsius, Elf, and Rigetti. Makeup, quantum, and really disgusting energy drinks is where the market's rotating to. Can you do a poll if we're scared? Okay, I'll ask. Are you scared? Look, in the face of all of this, my answer to are you scared about this market would be no. But because at the end of the day, like still the S&P is not down as aggressively as it needs to be to like get scared, but it looks like it wants to be. I mean, it lost the 200 moving day and it's now down another 1% of the day. So year to date, are we down 5% year to date already? Or we are down, no, 3%. So we need 5% for a pullback, 10% for a correction. So I still think we have some more pain to go if we're going to get it. Where's fear and greed? Fear and greed, that has to be lower than 18. 17. It's not below 14 yet, which we were at a couple days ago. But yeah, I wouldn't say I'm scared, bro. I mean, like, again, with the tariff volatility, if you understand why this is happening, which I think on the show we've done a good job explaining why this is happening, it's tariff volatility. It's just that simple. It's not like we don't know why this is happening. It's not like August 5th where everyone was searching for a reason and then we became experts on Japanese yen overnight, right? Like no one knew what was happening back then. Everyone knows this is a direct result of the uncertainty based on this administration's stance on trade policies. And when that changes, this could reverse. But no one knows when that's going to change. Trump's still not live yet. It's 11:44. Jay Powell goes live at 12:30. Where is Jay Powell even speaking today? Like, where is he talking? Monetary Policy Forum. Okay, he's talking at Chicago, Monetary Policy Forum. He might talk at the same time as Trump if Trump is late. Okay, here's a question. I already know the answer to this, but 51% of you said no. I already know the answer to this, but let's ask this question anyway. If Trump and Jay Powell conflict, who do we watch? I already know what you guys are going to say. I'll give my answer at the end, but I feel like I can say it right now. We're picking Jay Powell, dude. We're picking Jay. There's no way we're not picking Jay Powell. We are picking Jay freaking Powell. We got to pick Jay Powell. Like, we got to know what he's thinking about this jobs data. There's no way, because Trump's just going to be bragging about the non-farm payrolls, but Jay Powell's actually going to be giving us an inkling of if he's ready to cut or not. It's got to be Powell. Even though what Trump says might affect the markets even more, though. But we got to see. Okay, let's get an update from JP Morgan and get their thoughts on what's going on in this market right now.
Sell-off, dumping the NASDAQ into correction territory as we await the February employment report. I want to bring in Jack Manley. He is the global market strategist at JP Morgan Asset Management. Good morning.
Morning.
So help us understand what you think is about to happen here. We've got all these tariffs. The market's been in just a world of turmoil, maybe is the fairest word. Are you of the view that this is temporary hardship, or this is more permanent, or this is an opportunity?
I would say temporary, and as a result, probably an opportunity. I mean, when you have valuations as high as they are and as high as they were, you are always more susceptible to shocks. And there is no shortage of shocks right now. I mean, we have, of course, policy shocks that translate into potential macro shocks that translate into rate shocks. You have on the other side news like DeepSeek from like a month ago at this point, throwing a little bit of cold water on the AI story. And now jobs coming out later today. All eyes going to be on that because of these concerns about a growth slowdown. It's a market that's very sensitive, I think, to headlines, and it doesn't surprise me. There's been a lot of volatility.
But when I say opportunity, do you look at this and say, oh, well, things just got cheaper, they're on sale now, we should buy up?
We usually advocate against time in the market, but to me, that always means time in the market on the downside. You don't want to sell when things are looking rough. But if you're looking at a 10% correction relative to all-time highs, do you believe that we'll never get back to where we were a month or two ago? If the answer to that is no, you don't believe that,
Rather
then you should
buy it down-
probably
rather buy it
invest.
down-
Yeah,
rather
right.
buy it down
Well,
20.
but well, the flip side is, where do you think we'll be a year from now?
I am optimistic about the overall health of the equity market. You know, my baseline view for the economy right now is probably modestly above trend growth, reasonably tight labor market, probably right around where we are right now, slightly warmer than we'd like inflation, rates that don't move down a whole lot. And in that environment, if the labor market's tight and the economy is growing north of trend, you have to be risk on. I mean, it's a good environment for profits. The trick here is that given all that uncertainty with the macro, with the policy, with the rates, this is not, I think, a beta trade. I'm going to guess under the surface, there are going to be a whole lot of winners and losers, a whole lot of chop.
What does the 10-year tell you?
And do you assume if there's a slowdown in the economy, do you assume that's bad for stocks? Because I think the crack addicts are waiting for five cuts this year or something, or instead of one or two. I think they'd love it to be back in. There's times I think that growth is less important than the Fed.
It feels like a lot of this stuff has become sort of unimportant. I mean, whether it's the 10-year overall rate policy growth. I mean, when you talk about the engines of growth in the equity market, this AI story you were talking about earlier.
The Fed, when it comes right down to it, is the growth engine in the stock market, or it has been.
Certainly. Although, to be clear, the Mag 7 was able to shrug off overnight rates at 20-year highs. So, like, where is the sensitivity here in the biggest, most dynamic parts of the market? And AI is a long-term trend.
I guess the big thing, the question I'm trying to get at is between the tariff story, which has created this sort of remarkable level of uncertainty, which I think you're looking through past something I don't know.
Yeah.
And then what I imagine will be another fight come this summer, if not earlier, as it relates to taxes that will last a very long time, that it's going to be so choppy that when you say this is the opportunity, and again, I'm not a market timer.
Right.
But I would think things will get worse before they get better.
So, that goes back to, Joe, your point, right? Like, you can buy at 10, but why not buy down 20? The question is, are we ever actually going to get there? I'd rather have that bird in hand. I mean, I remember back in 2020 when the market's down 34, 35%, whatever it was, I had friends reaching out to me saying, well, surely we're going down to 50. I'm going to wait. And then they miss out on a once in a generational buying opportunity. I don't want to bank on future losses when I can already lock in that 10% correction, a better starting point.
Tom Lee on Monday, remember? We were down Monday, and he said, or we were up Monday, but he said, this isn't it, but I expect it to bottom this week. And
He did say this week.
Yeah, he said this week, expect it to bottom. Choppy, and he's been saying choppy for the first quarter, or at least for the first couple of months.
Although
we'll know next week whether it is.
Well, we had Amy Wu Silverman on, who talked about the technicals, and maybe that was Wednesday.
Yeah, it was Wednesday.
She said that this is the first she's felt like this since 2017, 2018, where she is worried about the levels they're seeing and worried about the
I wonder if
volatility.
that's good or bad. Yeah.
I mean, she was more worried than she's been
Yeah.
in a long time. And I don't know what that tells you on the technical side of things, or if you even watch them.
I don't really watch the technicals. We're much more fundamental driven. And, honestly, our whole ethos has always been that long-term view. And that doesn't mean 20 years. It just means beyond the
You
next
don't need a
12
lot,
months.
and when Jack, you don't need a lot to feel to want to sell this market. You don't need.
Oh, no.
It's all around you.
Not at all.
So
I mean,
that's usually positive.
It's going to take an iron gut to stay through it, but I think
Exactly.
you'd be rewarded.
Look, I largely agree with that. There's not anything I disagree with there, but it's the same narrative around being patient and weathering the storm to deal with what's going on. Apple is still green. Hood's down 8% on the day. NVIDIA, wow, 108.3. Holy crap. That's red. At this point, they want to take it below 100. Palantir down 1%. SoFi, well below 12, 1187. Apple 238, that's up 1.5. For some reason, the market thinks selling off NVIDIA and going to Apple makes more sense. I still don't get that. I really don't. I mean, I can make sense of it, but valuation wise, that is not something that makes sense to me. Google 170, Amazon 193, Reddit 133, Nubank 1030, Tesla 250. There she goes, 250, back to where it was right before Robotaxi Day. And then Robinhood basically wants to go below 40. I mean, it seems pretty obvious right here. 41.31 on Hood. Q's 481, and the S&P down another 1% on the day. What a market. What a fun market. Grab as well is down. I bought 100 shares of Grab at 445. Grab's a little bit of rebound at 450, but otherwise overall down. Again, Grab's a victim of this macro as well, dude, in the algos. I mean, overall, I think their quarter one's going to be amazing. I mean, they continue to grow. They continue to have strong guidance. They continue to create acquisitions. We talked about that a couple of days ago. Like their fundamentals are fine. The problem is the market's not going to let Grab get to $7 if Nvidia's stuck at 107, which is a new low for the day. It's just not going to happen, right? The algos will not allow it. So it's got to move with the market on this one. And if you're bullish over the next couple of years on the markets, I think Grab can be asymmetric, but it's not going to outperform if the rest of the market doesn't have. Same thing with a lot of these other stocks, right? Like Hood's not going to go to 60 if Nvidia's at 107. I think one thing about like being a market participant is you get very humbled and realize that this market moves together. Are there certain days where one stock's up 20% or one stock's down 5%? Sure. But in its totality, in an aggregate amalgamated form, the market moves as one in unison, right? And so it's just hard to see outperformance on certain names unless it's a totally different sector and there's a sort of rotation going on right here. Hershey's is up 6% because we're getting a rotation into value. I mean, Coca-Cola's probably up today. Where's Coke? Yeah, Coke's up 1.6. I wonder if Berkshire is up. Well, it has to be because of Apple. It has to be. No, that's down. Huh? Even Apple couldn't lift up Berkshire. I guess the other stuff in their portfolio is tearing it down, which is fair. But the sort of traditional value names, Verizon, AT&T, et cetera, all of those are green. As look at Verizon up 4% today. I mean, I don't want to be in Verizon at the end of the year over NVIDIA, but in the short term, yeah, Verizon's a space people are hiding out at. Until they get more updates on what's happening with these tariffs. Meta's at 600. Really? It was at 620 last time we checked. Wow, 602. This was the exact price it was at on the DeepSeek dip day. I remember because I woke up at 5:30 this morning and I saw Meta at these levels. I didn't buy it that day. I have a chance to buy it now. But now I don't know if I want it, right? Now I don't know if I want it. Well, now I don't know. Like now that we're in a downtrend, let's see, dude. Let's see. Is 550 available? 575. Like, what are we going to see on Meta? Down 4% is aggressive, though. Down 4%. Definitely getting some pain right here. Google's not getting hit as bad as Meta, but Google already got hit last week. Google's down 1%. Has Pelosi sold? We don't know. We're going to find out if they put out a press release, or not a press release, but her form. But we don't officially know. Bitcoin's at 86. Goodness, dude. It was at 92 or 91 this morning. Yeah, Trump talking about... Oh, Trump's live. Trump's about to be live. All right, here we go. We are live.
Direct your Department of Education and Department of the Treasury to basically bring about modifications to the public service loan forgiveness program in order to ensure that people who are engaged in these sorts of activities can't benefit from a program that's really not intended to support those sorts of things.
And what are the consequences if they are not good?
The consequences would be that they wouldn't get forgiveness of their student loans as they would be eligible for if they were working for the government or a normal nonprofit that's not violating the law.
All right. Any questions on that? Anybody have any questions? So we'll talk about the manufacturing turnaround, and it's been very early, but it's pretty significant. The numbers were much better, as you know, than projected by the media, and a little surprising actually how strong, how fast, because we have many companies are moving into our country. As you probably know, it's a statistic that everyone talks about, but nobody seems to have done much about. Since the beginning of NAFTA, there's been 90,000 plants and factories closed in this country. Think of that. 90,000 plants and factories have been closed in this country. Many of them have been car manufacturing plants. And that's a terrible statistic, and we'll be turning that around. You're going to see it already. We already have numerous that are being built or starting to be built, and numerous that were being built in other countries, and they stopped, and they're coming here now because of the tariffs. And that's a big deal. That's what you want to hear. During the last year, the Biden administration saw a loss of more than 110,000 manufacturing jobs, or 9,000 manufacturing jobs every single month. It averaged about 9,000 a month, 110,000 manufacturing jobs. During the first full month in office, we've not only stopped that manufacturing collapse, but we've begun to rapidly reverse it and get major gains. We created 10,000 manufacturing jobs in February alone. That hasn't happened in a long time. And these aren't government jobs, which actually we cut. These are private sector manufacturing jobs. So we gained all of those jobs, 10,000 jobs, and we barely started yet. That's a very unusual number. People are surprised by it. I'm even a little surprised. On auto jobs, we created almost 9,000 new jobs in the auto production field. And the reason for that is largely they think things are happening, so they're already geared up. In some cases, they had rooms in their plants, or they had empty plants that they were able to put into use quickly because they see, because of the tariffs, they don't want to be dealing with other places, and they don't want to go back and forth and around and through the borders and across Mexico border and Canada border and all of, they want to have the jobs in one location. And they've had space, and if they had space, they were able to create the jobs almost immediately. In some cases, they'll be building plants to take care of those jobs. So we created 9,000 new jobs already in the auto production, auto parts manufacturing. So we want the auto parts ideally, and I think from a simplicity standpoint too, to be built and made in the United States. It's in a single month. That all took place in a single month, 9,000 new auto jobs. You haven't heard that in a long time. After auto workers lost more than 27,000 auto jobs in the final year of Biden. These are also high-paying jobs. These are very prime jobs. The ISM Manufacturing Survey and the S&P Manufacturing Survey have also confirmed that our administration is presiding over a brand new domestic manufacturing boom after major collapse under Biden. It was a collapse. All he did is keep adding new government jobs, which are not the jobs you want. We're trying to shrink government and grow the private sector. That's what we've been doing under the...
Wow. So Trump pretty obviously saying we don't want more government jobs. And he's saying Biden was cooking the numbers with more government jobs. He wants more private sector growth.
Final 2 years of Biden, 1 in every 4 jobs created in America was a government job. That's a tremendous percentage. But under the first full month of President Trump, which we haven't even gotten started yet, an incredible 93% of all job gains were in the private sector. So that statistic just came out. Big gains for native-born Americans. For the first time in 15 months, the job gains for native-born Americans, for American people, people born in America, exceeded job gains for migrant and foreign-born workers. This is the first time that's happened in more than 15 months. Employment for native-born workers went up by 284,000, while foreign-born workers went down by 87,000. Now, you've heard the same stat where foreign workers were taking up all the jobs or almost all the jobs. In some cases, literally all of the jobs. And now it's 284,000 native-born jobs here, people born in our country, 284,000, while foreign-born workers went down by 87,000. First time that's happened in a long time. So these are incredible numbers, and they're very early. I mean, we're here for 5 weeks, but we have been talking about it since the big win in November 5th. So a lot of these people, they listen to us speak and they say, well, I'm going to gear up, and they're gearing up. And so they've been gearing up. They've had a little time. It's not just 5 weeks. It's 5 weeks plus a few months. And they are, they put it into effect pretty quickly. They have confidence that what I'm saying is going to happen. So with that, I'd like to ask a highly respected gentleman, Kevin Hassett. He's been with us for a long time, and he's been right about a lot. We had the greatest economy in history in the first term. And Kevin was a big part of it. So Kevin, could you maybe give it a little description, please?
Yeah, thank you very much, Mr. Trump. I think that the three things that you emphasized during the campaign is that you wanted to create domestic, high-paying manufacturing jobs, that you wanted to end wasteful government spending and reduce the unproductive government workers, and in fact, unleash them into the private economy where they could be more productive, and to create jobs for Americans. A lot of people said that if you deported illegals, that employment would go down because no Americans would take those jobs. And if you look, 280,000 American-born folks were hired, manufacturing jobs are going up. And this is just out of the expectation of your future policies, really, sir. It's in April when your Reciprocal Trade Act is expected to happen. The tax cuts haven't passed yet. And so people are clearly expecting the golden age. And if you want to forecast the future numbers, everybody, just keep in mind that President Trump has already gotten us 1.7 trillion in commitments of new factories. And those haven't even happened yet. Those aren't even in the numbers. And so I expect this is going to be a glimpse of a golden age to come, sir.
Thank you very much. One other thing, in Canada, we find that they're charging us over 200% for dairy products. You know about that. And when I left, we had that well taken care of. But under Biden, they just kept raising it. Very difficult to deal with, the Canadian representatives. 250% for dairy products, tariff. So where do you hear that? You don't hear that. They have a tremendously high tariff. Give you the exact numbers in a little while coming out on lumber. So they sell us lumber. They have a tremendous tariff. They make it impossible for us to sell lumber or dairy products into Canada. But our numbers are a tiny fraction of that, almost non-existent. And what we're doing is freeing up our forests from the environmental nonsense that they put on them, where you can't cut down a tree. And we have to cut down trees in order to build the firewalls. And those trees are sold, but we're freeing it up on an emergency basis because Canada has been ripping us off for years on tariffs for lumber and for dairy products. 250%. Nobody ever talks about that. 250% tariff, which is taking advantage of our farmers. So that's not going to happen anymore. They'll be met with the exact same tariff unless they drop it. And that's what reciprocal means. And we may do it as early as today, or we'll wait till Monday or Tuesday. But that's what we're going to do. We're going to charge the same thing. It's not fair. Never has been fair. And they've treated our farmers badly. Look, our country's been ripped off by everybody. And that stops now. I had it stopped in my first term. And we're going to really stop it now because this has been very unfair. Our country, from an economic standpoint, a financial standpoint, and a trade standpoint, has been absolutely ripped off by almost every country in the world. Canada, Mexico, and then you just go right down the line. India charges us massive tariffs, massive. You can't even sell anything into India. It's almost restrictive. It is restrictive. We do very little business inside. They've agreed, by the way, they want to cut their tariffs way down now because somebody's finally exposing them for what they've done. And same thing with China, same thing with a lot of other countries. And the EU has been a terrible abuser of this country. I mean, the EU was formulated in order to take advantage of the United States, and they have taken it, but they're not taking advantage when I'm in charge. So sometimes you'll hear some negative things. It's always from outside countries. America will be very strong. And, if I'm a foreign country, they're going to do fine, but they can't do like they used to do because we're going to bring back our business into this country. We need it from a job standpoint. We need it from even just a psychological standpoint. Think of it, 90,000 factories are gone since the beginning of NAFTA. So we're not going to have that, and we're going to see them build it back. Now we've already had 5 major automobile companies. First time you've heard this in a long time, since my first term, actually, where we were really rocking and rolling. And then Biden came in and he stopped everything, like such a stupid thing to do, not even a believable thing. But we have many auto plants now coming in. We have big chip plants. We have the biggest chip company in the world, most powerful, probably one of the most powerful companies in the world. Wouldn't you say, Kevin? And he's coming in and they're building one of the largest chip plants in the world. That'll be done in Arizona. mostly in Arizona. And that'll give us a big percentage. That one plant will give us a big percentage of the chip market, something we have very little of. You know, we used to have Intel, and Intel was run by a man named Andy Grove. And Andy Grove was a tough, smart guy. I used to read about him when I was a young man, and he did an incredible job. He really dominated the chip business. And then he died, and I guess they had a series of people that didn't know what the hell they were doing, and we gradually lost the chip business, and now it's almost exclusively in Taiwan. They stole it from us. They took it from us, and I don't blame them. I give them credit. I blame the people that were sitting in this seat because they allowed it to happen. We could have protected that so easily, but so we had the chip business, and now it's all in Taiwan, almost exclusive, a little bit in South Korea, but mostly in Taiwan. And it's very important. Everything you do, everything you touch is now about chips. The brake of a car, cars have chips all over the place. I was reading an article the other day where they talk about the brakes of a car are loaded up with chips. Who would think that a brake has a chip in it? But it's all about chips. So that was a big thing. And they'll be investing hundreds of billions of dollars in this country, and we'll be taking back a big, big portion of that industry. We have others coming in too. But a lot of car manufacturers are coming in, and they're coming in fast. And one of the reasons you see these numbers, and again, Kevin said it, and I said it a little bit, but the fact that they know I won the election. So after I was president-elect, they assumed that I was going to do what I said, because I do what I say. And so these numbers really reflect a lot of things that took place since November 5th, right? So, Kevin, thank you very much. Great job. Any questions?
Mr. President, how concerned are you that the large-scale federal government layoffs will weaken the labor market? How concerned are you?
The large-scale fentanyl what?
The federal government layoffs will impact the labor market. Will weaken.
This is an important question. So basically, could the labor market tank if the government keeps downsizing?
The labor market.
Oh. No, I think the labor market's going to be fantastic, but it's going to have high-paying manufacturing jobs as opposed to government jobs. We had too many people in government. You can't just do that. We had too many. This is for 40 years. You know, this isn't just now. This built up and got worse and worse, and they just hire more and more people. You look at Department of Education, it seems like so many buildings I ride by, it says Department of Education. They're all over the place. And we don't even want it. We want the education to be given by the states. It'll be much better. It'll move us to the top of the list from the bottom of the list, and actually save us money. But it's too important to even talk about them. It'll save us a lot of money, but we don't want that. We want education to be given. So you go to Iowa and Indiana and Idaho and all these places that are so well run. They're going to be producing education that will be the equivalent of, like, Denmark is one, Norway, Sweden. Actually, China is one of the better in terms of education. And so we can't blame size anymore. You know, China has 1.4 billion people, but they're very high on their list. The one thing we're doing well on, we're number one on the list, is cost per pupil. We spend more money than any other country in the world by far. So I jokingly say the one thing we do well on is the cost. We spend more money, and yet we're toward the bottom of the list. Yeah.
Mr. President, I want to ask you the joint address. Millions of Americans watched your joint address earlier this week, where you warned that there could be a little disturbance that Americans could feel as a function of these taxes, these tariffs. How much disturbance are you willing to accept in the near term as a function of that? And to set expectations, how long should Americans expect things to cost a bit more?
Well, so far, Peter, there hasn't been very much, because these numbers are coming out. We're here for just a little over 4 weeks. And these are fantastic numbers. I was watching some of the reports this morning. They were surprised. There could be some disturbance, a little bit of disturbance. I solved a little bit of that because I have respect for our auto companies. And I gave them a little bit of a 1-month reprieve because it was unfair, although I'm sure they'll take advantage of it. I see they're driving a lot of cars into the U.S. to try and avoid the tariffs, and taking advantage of it a little bit. But they called me, they asked me, they said, could they have a little bit of help? And I decided, they're American companies, USMCA, and I let them have that. But this really kicks in, the reciprocals, kicks in on, let's see, I guess the 2nd. And I wanted it to be the 1st so badly. It just didn't want to be on April Fool's Day. So I made it the second. That's going to cost a lot of money. That one day is going to cost a lot of money, but that's okay. But I don't see it. I don't see anything. I see good reports. I think we're going to have good numbers from the beginning. Now, globalists won't love this because this brings jobs back to America. So if they're coming back to America, maybe you'll lose some in other parts of the world. But the other parts of the world have done very well, and they'll continue to do very well. But I think the United States is going to be doing record business. We'll bring a lot of those 90,000 factories that have been lost over the last number of years. It's been, it's hard to believe. 90,000, think of what 90,000 is. 90,000 plants and factories are gone. We're going to bring back many of those plants and factories.
One day the tariffs are on, the next day they're off. Right now, the markets, as you know well, prefer stability. Are you done going forward with
This is the stock market question. Let's see what he says.
the pauses and the carve outs? Is that it for those?
There'll always be changes and adjustments. And, you know, you can't just, I could have, for instance, told the American car companies, no, I'm not going to give you anything. And then you wouldn't have had to say, well, they're getting a little extra. It's just a little bit of a 1 month reprieve. They're very happy about what's happening. They won't have to go across borders, and you see the zigzag, and you have a fender made in Canada, you have something else made in Mexico. We don't want that. We want it made here. But there'll always be some modifications. I mean, if you have a wall in front of you, sometimes you have to go around the wall instead of through it. But I think very little. I think very little. On occasion, if we can do something, we want to help companies. We want to help companies create jobs. So I could have left that, and you wouldn't have had a minor change. Instead, I was asked by the real majors, the big majors, if they could do this. And I said, yeah, I'll do it. I want you to produce a lot of jobs. And numerous of the people, actually all of the people I spoke to have already been, they're very much on the way to already doing it. That's why you have auto jobs increase. And the man, I don't know him, Sean Fain, I don't know him, and I did great, as you know, with the auto workers, with the Teamsters, with unions. I did fantastically well, best numbers ever by a Republican. And I have a lot of respect for those people. But Sean Fain, who I don't know, but wasn't a supporter, although the auto workers were big supporters. I watched him last night, and he said, Donald Trump is absolutely right on tariffs. He said, what he's doing on tariffs is an incredible thing. And it's about time somebody had the guts to do it, because we're going to save auto manufacturing. And I said to people when I was campaigning, you're going to have so many auto jobs, you're not going to believe what's going to happen. We're going to load up Michigan. I won the state of Michigan, as you know. And part of the reason I won it was I got a lot of auto workers that voted for me, Detroit, etc. But I think people are going to be very surprised. Yes.
Thank you, Mr. President. You mentioned in your remarks chips manufacturing, how a significant percentage is now in Taiwan. You also mentioned it in your address to Congress, and you called on Congress to overturn the CHIPS Act, which had bipartisan support in the last Congress. Why would you like to see this particular law overturned, Mr. President?
Because it's hundreds of billions of dollars, and it's just a waste of money. Now, some people have already taken the money and used it. Actually, it's very hard to qualify because they go by race, they go by gender, they go by all sorts of things. Nobody's ever seen anything like it. You won't be able to find those people. So I don't even think anybody can qualify. They have so many different categories. In order to qualify, you have to have so many of a certain race, a certain gender, a certain this, a certain, and I don't think they can qualify, but if they take the money, they better qualify because they'll be watching them. But it's a tremendous waste of money. I didn't give the greatest chip company in the world, one of the greatest companies, I didn't give them 10 cents. They came here because of tariffs, because they didn't want to pay the tariffs. And they also came here because they like the results of the election, because they know that I'm very pro-business and pro-jobs. I mean, I'm pro-business, not for business sake. I'm pro-business because of jobs, because business is producing the jobs. Okay?
Russia, if I may, President Putin is bombing Ukraine.
Yeah.
Do you still believe him when he tells you that he wants peace?
You know, I believe him. I believe him. I think we're doing very well with Russia. But right now they're bombing the hell out of Ukraine, and Ukraine. I'm finding it more difficult, frankly, to deal with Ukraine. And they don't have the cards. They don't have the cards. As you know, we're meeting in Saudi Arabia on sometime next week, early. And we're talking, I find that in terms of getting a final settlement. It may be easier dealing with Russia, which is surprising because they have all the cards. I mean, they're bombing the hell out of them right now. And I put a statement in, a very strong statement. Can't do that. Can't do that.
Mr. President.
We're trying to help them. And Ukraine has to get on the ball and get a job done. Michael, could you come up here? I see Michael back there. Good. I'm glad. He's traveling all over the world. I just saw him come in the door. Could you give a little definition of what's going on, please?
Sure. Well, the president has been crystal clear, and he's been clear to all sides. The fighting has to stop. Both sides need to get to the table. We had a good engagement. Both leaders have said only President Trump could do so, and only he has been able to do so. We had an initial engagement with the Russians. The Ukrainians had a great opportunity to bind our economies together through that mineral deal. Unfortunately, that didn't go so well, but we think we're going to get things back on track. Secretary Rubio, myself and the Ukrainian delegation will be meeting in Saudi Arabia next week to get these talks back on track, get a ceasefire in place, and drive peace home under President Trump's leadership.
I think both parties want to settle. I think if I wasn't president, this war would have had no chance of settlement, zero chance. But I think we're going to get it settled and stopped. We got to stop. They're losing on average 2,000 soldiers a week. That's a lot of soldiers. Do you agree, Peter?
It's a lot of soldiers on both sides. I agree. Do you, Mr. President, think that Vladimir Putin is taking advantage of the U.S. pause right now on intelligence and military aid to Ukraine?
No, I actually think he's doing what anybody else would do. I think he wants to get it stopped and settled, and I think he's hitting them harder than he's been hitting them. And I think probably anybody in that position would be doing that right now. He wants to get it ended, and I think Ukraine wants to get it ended, but I don't see it's crazy. They're taking tremendous punishment. I don't quite get it, but I suspect, Michael, he probably wants to get it ended.
He does, Mr. President. The Russians are taking incredible losses on the front. As the president has
They both
said,
are.
this is a meat grinder of people, of material, of national treasure, and no one else has any solutions except to let this war continue forever. But I'll add, the president has had multiple conversations and a visit from President Macron of France, Prime Minister Starmer of the United Kingdom. We have the NATO Secretary General coming next week. We have this meeting with the Ukrainians. We've had it with the Russians. All of this in the president's first month in his leadership. We will engage in the shuttle diplomacy, and we will continue to use his leadership and what leverage we have to get both sides of the peace table. It's not going to be easy, but President Trump.
This war should have never happened. It would have never happened if I were president, but it did happen. So a lot of other things shouldn't have happened too. We shouldn't have 21 million people pouring into our country through open borders, many of whom are criminals, very bad criminals, including murderers, thousands of murderers, many killed, far more than one person, and they're roaming our streets. But Tom Holman and Kristi Noem are doing an incredible job, and we're getting them out of here. And we'll get them out. We'll get them all out. But all these things shouldn't have happened. We shouldn't have inflation. We shouldn't have had this horrible inflation where the prices have gone up. Look at eggs. So we're doing a good job. We're doing a good
Mr.
job.
President, in regards to the pause on military assistance to Ukraine, you put out on your social media post today that Russia is pounding Ukraine.
That's right.
Why not provide Ukraine with air defenses? And what happens, Mr. President, when Ukraine runs out of
Well,
the
because
Patriot missile batteries?
good question. Because I have to know that they want to settle. I don't know that they want to settle. If they don't want to settle, we're out of there because we want them to settle. And I'm doing it to stop death, more important than anything else. Secondarily, way down the line is the money. So we're in for $350 billion and Europe is in for $100 billion. They should be in for the same or more than us. And, you know, I watched over the last week or so what's going on in Europe. This thing could end up in World War III if we don't get it settled. This could really end up in a World War III. We got to get it settled.
So on Iran, how confident are you that the Iranians will negotiate with you? And is Israel on board with this outrage?
Yeah, I saw the hostages the other day. They came in, people that were not young, some young and some older, much older. And they gave, it was hard for them to do it, actually. They gave statements as to what happened. I was asking, what happened? How was it? I said, did you see anybody in there that was kind, like out of the hundreds of people that you were seeing, Hamas? Did some of them wink at you and say, don't worry, you're going to be okay, or give you a piece of bread, or no? I said, were there any people that were like kind? I was shocked. The answer was nobody. There was nobody. Just the opposite. They'd be slapped and punched. One man broke his ribs. He couldn't breathe for a month. It was brutal. I was so surprised. Could you think there'd be a couple of people that would be kind, that would say, you're going to be okay? But they had none of that. It's pretty amazing. Brian?
Thank you, President.
He's a kind person.
Well, according to
Although not to Zelensky, he wasn't. But to Trump, he's been good. Go ahead, Brian.
Nice tie, by the way.
Thank you. Thank you. I like yours too.
Two questions. One on peace. Why don't you think any other European countries are offering a peace deal? It seems like no one's come to the table for peace except for you.
Yeah. It's a very good question. Sometimes questions aren't answerable. They're in a very unusual position. They don't know how to end the war. I think I do know how to end the war. Despite the Russia hoax, I've always had a good relationship with Putin. And, you know, he wants to end the war. He wants to end it. And I think he's going to be more generous than he has to be. And that's pretty good. That means a lot of good things. Because frankly, you could have made a great deal if this war never started, you could have made a great deal. I don't know that anything would have had to be given up. This was not a war that was going to start, Brian. And it didn't start. For 4 years, somebody said, well, how do we know that? Well, for 4 years, it didn't start. I used to speak to Vladimir about it. I used to speak to him about it at length. It was the apple of his eye, but there was no way he was going in. And he knew, there were going to be consequences. But it did start. I mean, think of what happened. Inflation, you have the war with Ukraine and Russia, that wouldn't have happened. October 7th would have never happened. Israel, they had no money. Iran had no money. Iran was stone cold broke, and now they have a lot of money. But then that's going to be the next thing you'll be talking about is Iran. What's going to happen with Iran? And there'll be some interesting days ahead. That's all I can tell you. You know, we're down to final strokes with Iran. That's going to be an interesting time. And we'll see what happens. But we're down to the final moments. We're at final moments. You can't let them have a nuclear weapon. I think that I would have had a deal within 1 month after the rigged election of 2020. They were all set to make a deal. And then when I lost, they saw this person who's a stupid person, very stupid person. And they said, let's not make a deal. And they were right. He took the sanctions off. They became rich under Biden. They went from having no money to having $300 billion. All in a short period. It's oil. Oil builds up fast. It's a nice living if you have a nice oil well. And they do. They have a lot of nice oil wells, right? So anyway, it's going to be a big thing. It's an interesting time in the history of the world. But we have a situation with Iran that something's going to happen very soon. Very, very soon. You'll be talking about that pretty soon, I guess. And hopefully we can have a peace deal. You know, I'm not speaking out of strength or weakness. I'm just saying I'd rather see a peace deal than the other. But the other will solve the problem.
Mr. President, your allies are calling on you to pardon Derek Chauvin. Are you considering pardoning Derek Chauvin?
No, I haven't even heard about it. No.
Mr. President, on peace.
I haven't heard that.
In the first term, you may recall, I broke the news that you were nominated for the Nobel Peace Prize. And the reason for that was the work that you led on the Abraham Accords. I spoke yesterday with the member of parliament, the Norwegian parliament, that nominated you. And he said what the Nobel Committee is looking for from you, Mr. President, is security guarantees for Ukraine. Is that a possibility, Mr. President?
So before I even think about that, I want to settle the war, get it finished. Because if I'm not here, nobody's going to settle it. And President Macron has said that, and everybody said that. The prime ministers and presidents. We're pushing very hard. That's all I'm thinking about now. As far as the question about security later, that's the easy part. The hard part is getting it settled. We got to get them. We're losing 2,000 human beings every week. More than that, actually. 2,000 nice, young, although they're getting older because they're drafting much older now. In the case of one country, much older, because a lot of the young people have been killed. It's very sad, and I'd like to see if I could stop that. And I'd like to also see if we could stop making these massive payments from the United States. I mean, Biden gave away money like it was water, with no anything, got nothing for it. Europe did it in the form of a loan. They get their money back, we don't. So that's how we came up with the rare earth deal. But we started, behind the 8 ball. He could have gone to Europe. He could have said, "Come on, you got to put up money with us. You got to put up money with us." But he never did that. They just kept handing money out because he was grossly incompetent. All right, thank you very much, everybody. Thank you very much.
Thank you. Thanks, guys.
All right, that was Trump talking about the jobs data. We should have Powell in just a couple minutes. Markets are Palantir is going green. Nvidia is going green. I mean, not green yet, but it's bounced from the 107 lows. S&P as well is up from 565 to 567. You got a little bit of a green candle across the board. Nothing too substantial. Whatever Powell says in the next 30 minutes is really what is going to determine, I think, how equities react. What are we expecting for Powell? So Trump just said the labor market is great, and he's not worried about the government downsizing jobs. I think Powell is going to be talking about the labor market maybe being not great, but not horrible, which creates the sweet spot for a potential cut. But he's going to have to weigh that against the inflation expectations that are also obviously not the best, given we are still right about 3% on headline inflation. And it's going to be interesting to see if Powell thinks that inflation is coming down even without the latest CPI, PPI data, based on the idea that he thinks shelter might be lagging. He might think food and energy is starting to come down. We see oil prices get to their lowest levels in the past 7 months. So, I mean, really, I guess the market's going to react to how Powell is thinking about the current state of the labor market. But we will get him on pretty soon. Let's get to CNBC, and he'll be on in a couple minutes.
Direction they're going when you don't know what earnings are doing. And we went into this year thinking earnings are going to be up 16%, and you see everyone adjusting that down and adjusting that down. So what multiple do you pay on the market, and then how does that trickle down to financials?
This is really most acute with small caps, which are set for their 6th negative week. That's the longest streak for the IWM and the IJR since 2018. So that is really where the Russell, by the way, is down 11% in a month. Why? Because of concerns about the slowing economy. And on that note, let's get to our senior economics reporter, Steve Leisman.
Fed Chair Jay Powell, in his speech here at the U.S. Monetary Policy Conference in New York, will say that he sees significant policy changes from the administration in trade, immigration, fiscal policy, and in regulation. Goes on to say the net effect of all of these changes is what will matter for the economy and for monetary policy. He said uncertainty around these policy changes is relatively high, especially when it comes to the issue of trade. But the Fed, he says, is focused on separating, quote, signal from the noise. He says the Fed is well positioned with current monetary policy to wait for greater clarity, suggesting a lot of patience on the part of the Fed here. He says the Fed can hold policy if inflation doesn't move, and he expects, by the way, a bumpy inflation path to the 2% target to continue, and near-term measures of inflation expectations have moved up, with long-term measures being stable. The Fed can ease, he says, if the labor market weakens unexpectedly. U.S. economy overall, he says, is in a good place, despite elevated levels of uncertainty. And Powell says the labor market is solid, inflation close to the 2% goal. And let's listen to the chairman.
It turns out we don't actually have a majority of the FOMC here, so we can speak to each other without violating the government of sunshine law. So I have some brief remarks about the economy and the path of policy, and then I look forward to our discussion. Despite elevated levels of uncertainty, the U.S. economy continues to be in a good place. The labor market is solid, and inflation has moved closer to our 2% longer run goal. At the Fed, we are intently focused on our dual mandate goals given to us by Congress: maximum employment and stable prices. Turning to the recent data, the economy has been growing at a solid pace. GDP expanded at a 2.3% annual rate in the fourth quarter of last year, extending a period of consistent growth that has been supported by resilient consumer spending. Recent indicators point to a possible moderation in consumer spending relative to the rapid growth over the second half of 2024. Further, recent surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. Sentiment readings have not been a good predictor of consumption growth in recent years. We continue to carefully monitor a variety of indicators of household and business spending. Turning to the labor market, many indicators show that the labor market is solid and broadly in balance. The jobs report released this morning showed employers added 151,000 jobs to payrolls in February, and the unemployment rate ticked up 0.1% to 4.1% last month. Smoothing over the month-to-month volatility, since September, employers have added a solid 200,000 jobs a month on average. The unemployment rate remains low and is held in a narrow range between 3.9% and 4.2% over the past year. The jobs to workers gap has narrowed, and the quits rate has moved below pre-pandemic levels. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. With wage growth moderating and labor supply and demand having moved into better balance, the labor market is not a significant source of inflationary pressure. For inflation, inflation has come down a long way from its mid-2022 peak above 7%, without a sharp increase in unemployment. A historically unusual and most welcome outcome. While progress in reducing inflation has been broad-based, recent readings remain somewhat above our 2% objective. The path to sustainably returning inflation to our target has been bumpy, and we expect that to continue. We see ongoing progress in categories that remain elevated, such as housing services and the market-based components of non-housing services. Inflation can be volatile month to month, and we do not overreact to one or two readings that are higher or lower than anticipated. Data released last week show that total PCE prices rose 2.5% over the 12 months ending in January, and that core PCE rose 2.6%. We pay close attention to a broad range of measures of inflation expectations, and some near-term measures have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain stable and consistent with our 2% inflation goal. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their likely effects remains high. As we parse the incoming information, we are focused on separating the signal from the noise as the outlook evolves. We do not need to be in a hurry, and we are well positioned to wait for greater clarity. Policy is not on a preset course. If the economy remains strong but inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our mandate. Before I conclude, I'll note that at our last FOMC meeting, we began our second 5-year review of our monetary policy framework. We will consider changes to our consensus statement and to our communications as part of this review. The consensus statement articulates our framework for the conduct of monetary policy in pursuit of our statutory goals. We will consider the lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. The 2% longer run inflation goal will be retained and is not a focus of the review. This public review will be familiar to those who followed our process 5 years ago. We will hold outreach events around the country involving a range of parties, including Fed Listens events. We're open to new ideas and critical feedback. We will host a research conference in Washington in May. Our intent is to wrap up the review by late summer. Thank you very much. I look forward to your questions. Anil.
All right, thanks for that. Before we get into the current conjuncture, is there anything more you can share about where you think the framework is going to land? It was nice to hear the parameters that you laid out, but is there anything more that you can say beyond what you just?
Sure. So I said there are two things really. There's changes to the consensus statement, and then they're looking at really our post-meeting communications. We're going to look at those two things a lot. And as it relates to the consensus statement, which is also known as the Statement on Longer Run Goals and Monetary Policy, therefore it needed a shorter name, we are going to be looking a lot at the changes that we made in 2020. So if you go back to 2020, what we had was we'd been at the effective lower bound for 7 years. We never got rates above 2%. We were at 1.5% when the pandemic hit. And the feeling very much was that if even a mild downturn came, we'd be back to the effective lower bound, maybe again for years on end. So we were looking for ways to try to minimize the likelihood of that. And a pretty standard result in the research was a kind of a makeup strategy. That's what that was. So the framework changes that we made were very focused on the importance of the effective lower bound problem, which was thought to be the big problem at the time. And those were the changes that we made. So, and we thought that those issues would be persistent, but the universe had other ideas. And the pandemic arrived just a few months after we implemented the framework and really changed the whole mixture. And effectively the idea of an overshoot, of a modest overshoot or moderate overshoot of inflation really became irrelevant. And we were back to the regular framework, and we did what we did, and you have the results today. So I think we'll be looking at, for example, the focus in the consensus statement, we'll be looking at the focus that we had on the effective lower bound. It's probably not the base case anymore, but it's probably still relevant. We'll be looking at shortfalls, which is an interesting idea, and there are different ways to express that. And we'll be certainly we'll also be looking at the idea of having a moderate overshoot of inflation over the 2% target following periods when inflation has been low. We're looking at all of those things, and again, I expect to be done, by the end of the summer. On the communications, particularly our post-meeting communications, we're going to take a close look at the SEP and also compare ourselves to what other central banks around the world do. And this will be a couple of weeks from now. We'll have our second meeting, and I think we'll be done in time for sort of the end of the summer.
Okay, that's great. Let me pick up on this question about the level of prices versus the inflation rate. Economists spend a lot of time making the distinction between the rate of change and the level. I'm not sure that the public fully understands this because you see these surveys about how frustrated people are with inflation. Inflation now is not that different than your target. It's above, but not meaningfully so. But do you think that price stability needs to take into account how far you wear away from the objective? And if you've had a big run up and the level remains high, even if the inflation rate is back to normal, is that something we need to reconsider?
The public experience, what the public experiences is the prices of things. And the prices of things went up a lot in 2021 and 22, and to some extent in 23. And when we talk about inflation, we're obviously talking about the rate of change now. But the public's not wrong. They are experiencing high prices, and obviously you can have a great labor market, but if people are really struggling because of high prices, that's what they're really going to feel. So they're right about what they're saying. In terms of, I don't think there's any need to redefine price stability. I think you can always go back to the way Alan Greenspan said it. I won't get the exact words, but everyone here knows the idea is if businesses and households are making their economic decisions without having to consider the possibility of high inflation, that's price stability. I don't think we need to rethink inflation the way we deal with it. I don't think we need to reinvent price stability. So,
okay. Okay, the elephant in the room. Economists normally assume that a tariff is passed into domestic prices. And as the Secretary of Treasury said yesterday, that would change the level of prices once, but wouldn't mean anything for inflation a year later. If we're looking at what happens over the next year, how would we know if the conventional view is not correct and that it's leaked into something more troubling?
So I think that start with the general thought is that if there's a spike in prices that's a one-time thing that is going to go through the economy, then it's not appropriate to react to it, because our policy by design will reduce employment and activity, and it would not have really been needed to be done. So you look through those things if you can. So if you put that in the context of tariffs, you know, I think if you look at where forecasts are, look at the blue chip, look where everybody's forecasting some inflation effect from tariffs. So it's very likely that you know that if tariffs are imposed, and let's remember, we really don't know what's happening yet. We're at a stage where we're still very uncertain about what will be tariffed, for how long, at what level. We're going to have to wait to see all of that. But the likelihood is that some of that will find its way, you know, it'll hit the exporters, the importers, the retailers, and to some extent the consumers, and we'll see what that is. And in a simple case where we know it's a one-time thing, you know, the textbook would say look through it. But I think the situation, you would want to also be sure of a couple of things. One just is that if it turns into a series of things and it's more than that, and if the increases are larger, that would matter. And what really would matter is what's happening with longer term inflation expectations and how persistent are the inflationary effects. You want to look at all of those things, and you'd want to remember the current context, which is we came off of very high inflation, and we haven't fully returned to 2% on a sustainable basis. So you got to put all that in the mix as you make this decision. I would point people back to 2019, you know, when we had the Tax Cuts and Jobs Act, we had lower immigration, and we had regulatory policy under President Trump in the first regime, and you know, we wound up cutting 3 times because growth weakened so much. So there are many effects of tariffs. And as I pointed out, it's really the effect of all of these policies that matter for our policy. It's not simply what's happening with tariffs. It's what's happening with growth and all the other things as a result of these broad changes in economic policy, not just tariffs.
Okay, just to put a point on this, I think I know what you're going to say, but the usual rule that economists hold is that when an uncertainty is high, we're gradualist. And I'm wondering whether you view that as the right benchmark or anchor to think about.
I view it as the right benchmark or anchor for right now, and that's because the costs of being cautious are very, very low. You know, the economy's fine. It doesn't need us to do anything really, and so we can wait, and we should wait. I think there are cases where uncertainty is high, where that would not be the case, where the costs of going slow might be high, and those would be, for example, you know, if inflation expectations were clearly under pressure, or if you're at the beginning of the pandemic and uncertainty is unquestionably elevated, but you nonetheless act very aggressively because of the potential cost of not doing so.
Okay, that's interesting. But I'll ask a couple more conjunctural questions, but there's a lot of people in the room here that are very curious about what you want to say about the Basel III endgame. So that's inside baseball, but people's wallets depend on this. So you want to say anything about that?
Sure, absolutely. So our view at the Fed is we very much intend to complete the Basel III endgame. And we think that's very important. We think that the Basel Accords really are important to set sort of minimum standards for international banking around the world. And we expect that we will. We're kind of on hold until the U.S. banking agencies are really back up and running with new leadership. But once they are, we fully expect to get back to that work and complete the Basel III endgame. And I have a good reason to think that we'll be able to do that.
That's good news. Another little bit of inside baseball, but there's been a lot of discussion in the last few weeks about changing some of the statistics that are emphasized about the economy. And the Commerce Department recently disbanded the Federal Economic Statistics Advisory Committee. And I know during COVID, you felt like there were many indicators of the economy that were kind of broken or not so helpful. So do we need to worry about whether the Fed's ability to do its job might come into question because of deficiencies in the statistics? And are you already, let's do that. I'll ask a follow-up.
Yeah, so there's two different things. I think it needs to be said that the government data we get from government gathered data we get from the Bureau of Economic Analysis and the Bureau of Labor Statistics is incredibly important and really the gold standard for data. Being able to track what's going on in the economy is very, very important, and it's something that the United States has led in for a long, long time, and something we need to continue to lead in. It's true that survey responses have gone down, and that some of the data have become more volatile. That just means it's something we need to keep doing and invest in. So I think that's important. On the pandemic data, that's a different thing. You needed to measure things like how many people are going to restaurants, how many, you could look at open table data, things like that. So there were lots and lots of pieces of data we were getting about that showed how many people are coming back to work, riding the subway and that kind of thing. And that was important. It turns out all that data isn't super relevant except in an emergency. The other thing is though, at the Fed, we've always, for some time now, we've been, trying to work with these very large data sets that are available in real time now, for example, from credit card companies and things like that. And, trying to use these new and vast data collections in a real time way, is something that's really helpful.
Okay, I was going to ask you about whether or not there's some favorite private sector statistics that you think everybody should be looking at, but it sounds like you've just given us a hint on that. Let me ask a couple longer term questions. I know you're not in the job of reflecting yet, but when we look back at the rise of inflation and then its decline, what do you think the lesson's going to be about what we've just lived through?
Yeah, so I think it's actually still early to say. I think the question of what happened and why, and what all those questions around the events of the pandemic and the inflation and the efforts to bring inflation down. Economists are going to be battling over that for long after all of us are gone. But I would say a couple things. One thing is just that the tails are fatter than you think. However fat you think the tails are, they're fatter than you think. And human nature is, we always talk about uncertainty and how we understand everything's highly uncertain. We say it all the time. The tails are fatter than we think. So nobody saw the pandemic coming. Obviously, it wasn't reflected in our framework. When it came, we just went back to the old framework and dealt with it. But it was, there's always possible. That's one thing. Secondly, I think if you look, I talked about this at Jackson Hole last year. If I look back and it looks to me like what you had was a global burst of inflation everywhere at the same time. And it largely, you got to look at global factors. And it amounted to very strong demand, stronger than we thought. I don't think we had, the forecast error was two parts. Part one was demand was just stronger than we thought. It really was. We had in mind, the recovery from the global financial crisis, and instead we got this really high-powered response, expansion, recovery. So the other side is the supply side. The supply side was constrained. We lost 8 million workers, and it took a long time to get them back. And it was also all of the supply stuff that was happening. That took longer than we thought to unsnaggle. And we'd never seen it before. We knew in real time that it was going to be really hard to get that right. But so those two things created inflation globally, and central banks stepped in, and pretty broadly, we're back to close to mandated inflation and employment close to the natural rate, not just in the United States but everywhere. So in a way, the framework worked, but I think we learned we learned some of those lessons, and we'll still be learning them.
Okay, one other question in this direction. The U.S. has actually had the fastest recovery of all the major economies. And do we understand why that is? And does that, there was a question in the last panel about Y-star and potential growth. Do you think that we are learning something now about what the speed limit for the economy is, or is this just happenstance?
Yeah, I would put down the U.S.'s outperformance to three things, and the first is just one would be structural characteristics, and that's more flexible labor market, high rule of law make this, and we have a venture capital industry. Other countries are trying to do early stage financing out of banks. That's not going to work. So all of those things make us account for 40 years of productivity. That's double Europe's productivity. It increases. So that's thing one. Thing two is just population. We had a big population increase in 22 and 23, and that doesn't help with per capita, but that moves top line. And what was the third thing? Oh, productivity. So we had a really significant burst in productivity, and from a range of factors, you can never tell exactly where it's coming from. Some of those factors suggest, this gets to your last question, suggest that productivity will be kind of a one-time event. So, people were wound up automating a lot of functions in retail, and because people didn't want to work in retail anymore. But that may just be a one-time thing. Technological developments, on the other hand, might give us years and years of productivity. So there are a whole bunch of other things, and so we don't really know how long this burst in productivity will be sustained. But I think I never expected to see productivity this high for this long. And our staff is marking up their estimates of potential growth for now and taking some signal about the future. You won't have that population thing going forward, but productivity has been really strong, and I think it does actually raise, at least for the relatively near term, the level of potential output.
Okay, that's good. Okay, 30 years of teaching Booth students, I've learned you have to end these things with a fun question. So who's your favorite central banker? And I'll give you a hall pass on anybody that was on the board while you've been there.
What defines favorite central banker? Living?
I think he'll say Bernanke. I'm going to go with Bernanke. Let's see who he says.
You can constrain to living, or you can specify dead.
Well, I mean, I would have
open-ended question.
I'll take the easy route and say Paul Volcker.
Yeah, well, that was out. Yeah, that makes sense. That is the easy answer.
I did know over time, and pretty obviously, in central banking, nobody wants to be working in a central bank when inflation is really high, but everybody who works in a central bank knows what they have to do when inflation is high, and he set the gold standard for that. That is the thing. Most of the time, for 40 years, we haven't had to do that. It's just kind of demand management through a regular cycle. But when you have very high inflation and you have to do this is why we're independent. It's not for the good times. It's for the times when we're doing something which may be unpopular. That is our assignment. And I think Paul Volcker kind of established that. That was really not quite so clearly established at the time. So I'm going to go with Paul Volcker.
Okay, I'm going to out you on a private conversation, but I don't think you're going to mind too much, which is the Cork Center that hosts this event has a bunch of experts panels of economists where you can go ahead and answer a bunch of questions. They'll tell you who your favorite economist is. And Jay Powell's favorite economist is Anil Kashyap.
Let me tell you, it's a true story, and that was not a happy day. To learn that,
Anyway, well, thank you, and we're so glad that you were able to be here and share your thoughts. And
great.
So,
thanks very much.
Yeah.
All right, so Mr. J. Powell has turned my portfolio green. I don't expect it to last, but we were down 30,000 2 hours ago. We're now up 14,000. Again, I do not expect it to last at all, given what happens at the end of every day. But I'm sure some of you guys are feeling some of the green as well. NVIDIA 6 cents away from going green. Palantir is nicely in the green. Robinhood is about to, at least Robinhood's not back at 41. Robinhood now at 42.82, still down 4% on the day. But that one is maybe going to have a chance to go green. Google goes green. Bitcoin 86 to 88, maybe trying to go back to 90. Grab from 445 to 454. We bought that grab dip at 446. SoFi 1213, that was at 1182 at one point, and now the S&P is $1 away from going green on the day. Granted, I mean, we still got a couple hours left, and this has been such a ping pong market. I'm not sure if any of this is going to last. Tesla as well at 259, that's up from 250, 1.7% down on the day. But look, what did Jay Powell say? Essentially, I mean, the core arguments that Jay Powell made was that they don't see the need to cut rates anytime soon, which is fair because they don't have enough economic data. I mean, we kind of knew Jay Powell was going to say this to justify an immediate rate cut. However, in terms of the tariff policy, Jay Powell did say that uncertainty around the Trump administration policies and their economic effects remain high. To me, that means, AKA, we have no idea what this guy's doing with trade policy. And Trump probably wants it that way. I mean, like, let's not forget, Trump probably wants Jay Powell to feel the pressure of the uncertainty of this current environment. And that would hopefully allow them to be more likely to give a cut if they feel things are getting very uncertain. But that is what Jay Powell said today about the uncertainty of the trade policy. He also said the cost of the Fed being cautious is low. The economy does not need the central bank to do anything right now. So Jay Powell does not see the need for us to cut. Again, his threshold is pretty high for a cut. And that's been the nuance we've been talking about for the past couple of days. It's like, is the labor market data weakening along with ISM, PMI, services, et cetera? Is that enough mixed with the tariff volatility in the markets to outweigh the concerns about inflation? And notice who Jay Powell said is his favorite Fed chair of all time, Volcker. A lot of people have always had a conspiracy that Jay Powell wants to be the next Volcker. And what did Volcker do? He handled massive inflation. And Jay Powell probably doesn't want to be the guy that cuts too early, even though it might be the time to cut, because he doesn't want inflation to get even worse under this administration with the tariffs. So we're going to have to see how Jay Powell thinks about this over the coming weeks, but at least we got a little bit of a glimpse into what he's thinking today. Are we already going red? Are we already losing the green candles? Where is NVIDIA? NVIDIA, yeah, she's down 1% again. Oh my God. I feel like the Joker in Batman. All you can do is laugh, right? All you can do. It's like you keep getting punched in the face and he slams your head on the table. Literally, you just start maniacally laughing because what else is there to do? Yup, S&P. It was very close to green. It is now down almost 0.5%. Bitcoin, look at that, 88.5 to 87.5 within 3 minutes of me explaining what Jay Powell said. This is like, what else do you do? What else do you do? All you can do is laugh. Oh my gosh. All right, guys. That's it for me. 4-hour stream. I'll be back on the market close at 3:45. I'm not going to be streaming the crypto summit because I'm going to have, actually, you know, I might be able to stream the crypto. So I have a meeting at 2:15. That meeting ends at 3. If that meeting ends by like 2:55, I could be live by 3, maybe 3:05. So don't count on it at 3 p.m. to stream the crypto summit, but maybe, more likely than not, 3:45, I'll be live. And on the market close, we have Robinhood potentially getting into the S&P 500. We'll find that out at 5 o'clock. So if you're only interested in that, you can come by 5:15. We'll get the exact answers on Robinhood, Coinbase, App 11, who's it going to be. And then obviously we'll see how the markets end out in the next 3 hours. Again, I have no faith that we're going to end out green for the day. We're going to have to do a lot of work in the next couple hours to actually flip green. Apple, though, 240. I mean, this is just unfreaking believable. I'm sure Steve will have some words to say about Apple versus NVIDIA on the market close. We'll have Steve join as well, give his thoughts. But in general, it looks like we're going to end out red for a pretty volatile first week of March, following the volatility of the first 2 weeks of February. And we will see if the market digests any words that Jay Powell said and ends up flipping green by the end of the day. Chad, are you still live? Yes. We had to cover Trump. We had to cover Jay Powell. And now we're done. And now we are done. I haven't eaten or drank anything all day. Like, I just woke up, got ready. We're here. 4 hours later, portfolio is still red, even though we had 2 minutes of green when Jay Powell was talking. But yeah, now we are ending out still red on the day. All right, cool. I'll be live on the market close. Thank you, everybody. Appreciate it. Go get some lunch. We'll be back at 3:45, and hopefully we see Robinhood get into the S&P 500. Bye, everyone. Have a good one. See you guys in a bit.